Welcome. Wonderful good morning here in Amsterdam at this beautiful, beautiful building. Welcome to the Commodity Discovery Day. Really excited to be hosting this event. First time for me, but it's the 6th Discovery Day already, and the 4th time the company is presenting an award here today. We have 7 companies presenting, and 3 fantastic keynote speakers. One of them is Willem. We have Joanna Ponicka joining Willem on stage here in about 20 minutes. And Warren Gilman will be joining us as well, talking about how he is investing in mining and commodities as well. Really, really unique approach. Really looking forward to that. Before we get started, though, a bit of housekeeping. I'm going to introduce myself real quick. My name is Kai Hoffman. I'm the CEO of the SOAR Financial Group. I've been in mining, junior mining, for about 14 years now. Maybe even a little longer. And we've been active in the space. I'm an investor. I'm an entrepreneur in the space. I run the Deutsche Goldmesse, the German Gold Show. We have a YouTube channel with close to 13,000 subscribers as well, where we do interviews with mining CEOs. And overall, just really, really interested in the space. And I think the interest here is quite marvelous, amazing. Just seeing this here. I was at PDAC only, what was that, 4, 5, 6 weeks ago. 8 weeks now, it's the end of April, and PDAC is always at the beginning of March. It's the world's largest mining conference. It has an investor component to it, but there were no investors. So seeing everybody here is absolutely amazing, because this is way more than I expected, which is fantastic. So thanks so much for coming out. And as I said, now is the time to invest in commodities, whether it's discoveries or a later stage, doesn't matter. You all know the world needs commodities more than ever. So make sure to listen to the presentations very, very closely. One other thing Willem asked me to mention is this is a quite informal event. Like, we don't have coffee breaks or anything. So if there's anything you need, you can always get up, walk out, take care of it, have a coffee or something, and just come back. It's a really informal. Everybody's friends here, I've been told, so make sure to feel at home and comfortable here. Now, I think I've said my piece, and it's my pleasure to introduce Willem. He's the founder and, of course, the head of the Commodity Discovery Fund. Willem, wonderful good morning.
Wow, so many people. I gave a presentation in Frankfurt a few years ago, and we had 5 people in the room. 4 were presenters. And that was early 2016, so that was the bottom of the market. So is this the top? I don't think so. I prepared 250 slides for today. I will give 3 talks. You can leave if it's enough. I'll do a short introduction. I have 40 slides now. I'll do the keynote later this afternoon on the big reset. Lots of developments there. And I'll concentrate more on battery metals during our annual meeting. But I'm very happy to see many familiar faces, investors and companies presenting here. It's a day to celebrate the discoveries. It's a day also to honor the geologists who've been responsible for these wonderful discoveries. You will learn who's the winner of the Discovery Award later today. First, a disclaimer. I'm happy to tell you, our regulator, they informed us, we always were in class 7, high risk, high reward. And now we're only 6. We became more defensive, so. Well, actually, this whole journey into discovery investing started for me when I was working as a market commentator for RTL Z, Dutch CNBC. They just canceled me, by the way, because of my contrarian views. But and I was a private investor, so working on the stock exchange at day. During the night, I was a discovery investor. I learned about a few very amazing discoveries. I was a private investor. I didn't know Canada. I didn't know anything about geology. But I thought, let's make myself a specialist, and I invented the Middelkoop Discovery Alert Service in 2005. And I sent out my best tips for $150. And you can see it's here. Remember that one, Aurelian Resources? So everybody thought I was a genius, and then I had a friend, and he said, you're crazy. You sell your best tips for $150. You should build a fund. So that's what we did. And we started Commodity Discovery Fund. It's about the art of discovery investing. I've shown this slide many times. If you're lucky enough, you can make a lot of money, but you can also lose a lot of money. In the downturns, this is highly speculative. This was Aurelian Resources. There was some beginner's luck, bought 10,000 shares for 30 cents. And that was 6 weeks before the Frutal del Norte discovery. And it ran to $43 within 1.5 years. So that was an amazing one. It was one of the first investments in our fund as well. Although the discovery was in 2006, the company was eventually sold at the end of 2008. We believe in luck. And the harder we try, the more lucky we are. And I also believe you should open as many doors to luck as possible. And that's why we concentrate. It's our philosophy. It's our strategy. Concentrate on the best 100, top 100 discoveries worldwide. Metal agnostic. We don't care if it's copper, nickel, uranium. It's about the value of the discovery. And we really tweaked our investment strategy, and we ignore the hopefuls. So don't call us for money if you say, I will have the next discovery. We're not interested. Call us after the discovery hole. We expanded our team quite a bit. Our AUM is over 100 million now. So we have Martin Katzberg. He's working from the state of Washington, following the markets. We have Samson Lee. He is working from Hong Kong. Both have been private investors in this space for a long time, and they really have a good track record. What's our process? We follow discovery news, exploration news, drill results 24/7 with this team. We try to read everything. We pay for newsletters, specialized newsletters. You only need one good tip from one newsletter writer. We also look for good insider trading. A lot of this information is available online. You can see insiders buying and selling. They have to report it. And look what happened to us last year. Patriot Battery Metals responsible for a lithium discovery in Canada. Samson Lee gave the first tip in the end, late November 21, and we bought shares for 30 cents. Then he sent another report in March 2022, and we added to our position, and now the stock is running at $14. So this was his report in March 2022. He said the undervaluation is incredible, 9.5 for undervaluation. Maybe this is hard to read, but this is November 30, 21. He alerted us on these great results. So if our system works well, we are notified of a new discovery within 24 hours. There's another mail sent by Samson to us. And because he's based in Hong Kong, he's sending us these alerts during the night. So when we wake up, we're always aware of the latest news from Australia. We've had many takeovers in our portfolio since the start in 2008, because we have a great exit strategy. You can just wait for the buyout, for the takeover. If a small company makes a significant discovery, we always see a buyout because a major company would like to buy these reserves. So the full list is on our website. And we also completed this map recently. This is all the projects which have been taken over, all the 76. You can point on all the dots and find more detailed information. The takeovers of last year, 7. It shows there's a lot of M&A activity. The world's in need of more natural resources. So we expect the M&A activity to increase, especially now we have the divide between the East and the West, between the West and the BRICS countries. The Western countries, US and its allies, have really woken up that they can't rely on China. They don't want to be dependent on China, so they want to develop their own mines and their own industry. Well, you have luck and you have timing. I pointed to this before. I started the commodity fund at the top of the last commodity cycle. This is the CRB commodity index, and this index is down quite a bit. So this explains why the last 5 to 10 years have been quite hard as an investor. If we look at our main benchmark, that's the Toronto Stock Exchange Venture Index, since the start of our fund, it declined 91% when we reached the bottom during the Corona crash in March 2022. We've seen some recovery of the market, but since our start, we are down 19%. But our benchmark, the TSXV, is still down 78%. And the HUY, another important benchmark for gold producers, is down 50%. So this shows how strong the declines and the correction have been in the commodity markets. But when in doubt, I would say zoom out. Even in this very strong downtrend, in this very strong down market, bear market in commodities, we had 4 spectacular years with gross returns over 70%. So we are down less in bear markets and we go up more in bull markets. If we look at the rallies in these recovery years, in 2009 we had 6 double-digit months within 12 months. 3 of those months delivered gains of, well, let's go back. 3 of those months delivered monthly gains of over 15%. During the first recovery, the commodity markets bottomed out January 2016. We had 5 double-digit recovery months. 2 of them showed returns over 25%. And after the crash, March 2022, we had 5 double-digit months of recovery back to back. So we do think that the market has bottomed out again. Gold price is rising, silver is breaking out, so we expect a strong year this year as well. If we look at the valuation, this is the commodity, the ratio, it's the valuation of commodities in relation to the Dow Jones. And we go all the way back to 1900, and you can see everything is a cycle, especially in financial markets. We started our commodity fund at the top of the last cycle, when the valuations of commodities was quite high. So this has been the decline ever since. As said, there was a major bottom March 2020. Markets recovered a bit. But if we look at the current, this is another, well, show of the valuation of the metals and mining index. It's the price-earnings ratio. If the price-earnings ratio is sub 10, commodities are real cheap. And currently, producing companies, cash flow positive resource companies are trading around 6-7, PE of 6-7. It's the same like we've seen after the Lehman crash at the end of 2008. In this run, our fund went up 4x. So we see the same bottoming pattern here like we've seen 14 years ago. The world's in need of more discoveries. We're running out on many commodities. We see many stressed markets where we have production deficit, which means that total demand, total physical demand for metal is larger than total world production. And this quote by the CEO of Gold Fields explains it. The world needs 85 million ounces of gold every year. We discover not even half. So when you make a discovery, when you make a significant discovery, they will always be needed, they will always be bought out. And that's why we invented the Discovery Award. This is the 4th year that we'll present the Discovery Award. We had some great winners, Adriatic Metals, Greatland Gold, responsible for a large gold discovery in Australia. If you want to have a tip, buy Greatland Gold now. Their stock price is very depressed. And it's a very interesting situation. Last year, we had Philo Mining responsible for a great copper-gold discovery in the Andes. And this afternoon, we'll present a new winner. Why do we believe in discovery investing? Well, discoveries create value. The average company listed on the Canadian or Australian Stock Exchange pre-discovery has a value of around 5 to 10 million. When they make the first discovery, this value jumps to 20, 30, 40, up to 100 million. When it turns out it's a significant discovery, you see a rapid increase of the value of the company up to $500 million. And that's where we focus on the tier 1 and tier 2 discoveries. A tier 1 discovery like, well, the gray mining or some other examples, they quickly grow towards a valuation of 2, 3, 4 billion. NextGen Energy is a great example as well after their uranium discovery. And we focus on the tier 1 and tier 2 discoveries only. Our investments are worldwide. Main investments are in Canadian listed companies and Canadian projects. 30% of our investments is in Australia. We have some investments in Western Africa, Southern Africa, quite a bit of investments in Latin America. And as said, our strategy is metal agnostic and is also almost country agnostic. So we follow the largest discoveries. We don't care where it is. We've seen a very strong growth of our fund. This is the number of investments into our fund. And we've really seen, we had net inflow every year since our start, and we've seen a very strong uptrend since the Corona crash and the start of the inflation, the era of inflation. If you look at the assets under management, this was after the Lehman crash. We had a quick rise because the markets recovered. And then we had this long bear market. So we had net inflow of money, even in the bear market. But because the valuations and the stock price declined quite a bit, our AUM went down. I bought out my founding shareholders around this moment. And then we had a very strong rise. And now we reached 160 million euro in Q2 last year. We're down a bit, but we're comfortable over 100 million now. Our portfolio, if you look at the metals, we love gold because it's a hedge on all the problems in our fiat system, where we have continuous debasement of currencies. So 53% of our investments is not in physical gold, but in projects and companies who are gold related. 12% in copper, 11% in silver. Well, as said, we follow the discoveries. And of course, zinc is with a Z and not with an S. We need to do some editing. If we look at geography, 34% of our investments in North America, 25% in South America. And since 2017, 2018, we started to study Australia real well. First 10 years we ignored Australia, but the best discoveries are being made in Australia. Australia is very underexplored, and that's where we have some of our greatest successes. This is a bit technical chart. It shows the relation of commodities against the tech stocks. This is 92. This is 2000, 2008. So sometimes commodities are strong and tech is weak. Sometimes commodities are weak and tech is strong. And here you see the cycle as well. So we had a very strong bull market in commodities after 2000, when China entered the World Trade Organization. We had this huge bull run. We started our fund, as explained, in 2008 at the end of that bull run. The gains made in this period were incredible. And then we had to watch the bear market develop. And now in March 2022, after the Corona crash, I think this was a major bottom for commodities. And now we have this era of inflation. We have the tension between the West and the BRICS. You could even call it an economic world war developing, and I think will benefit greatly in the next few years. As said, we've had a few nice years. 2020 was one of it. We ended in the Bloomberg list out of 10,000 funds at the ninth place. Of course, we've seen many frustrated investors. We've been frustrated ourselves because of the long bear market. But the great thing is when you're a discovery investor, you're happy when prices go up, and when prices go down, you can buy a bit more. Thank you. Thank you.
Oh, wonderful. Well, thank you so much, Willem. The great introduction here. Don't worry, be happy. I think I said that in my introduction. Don't worry, be happy. I think this is the perfect time to be in this sector, and Willem just proved my point, I guess. And next up, we have a young and rising star here in the mining scene joining us. It's Joanna Ponicka of Equivest Capital. A little personal anecdote. I think I was the one who introduced Joanna to Willem at our conference in November. So I'm really excited that she's joining us here and presenting on discovery investing. But you look at it a bit differently.
Yeah.
Because you come from the oil and gas space. So really, really interesting. Really looking forward to your presentation. And thanks so much for joining us.
Thank you so much. It's a pleasure to be here. I need to wait for my slide deck. Push the button, okay. I hope it's this way. Nope. The big one. Perfect, thank you. I will talk today about exploration, a forgotten key to supply challenges, and I will actually talk about both mining and oil and gas. I'm a geologist by background, but I work quite a lot with actually acquisitions and divestments of the assets, as well as I'm an investor in the space, so I can relate as well to some of the challenges that you have as investors. I think we've all probably seen this graph or different versions of it when it comes to demand for base metals, especially driven by the electrification and the battery demand. It applies to almost all commodities, so we see very similar demand picture. And the challenge that we have as an industry that there's actually very few ready to be developed projects. A lot of them are not high quality, and those that are high quality are already being in the process to be developed. And common number two that we also see is that it takes 7 to 15 years to discover and bring a mine online. And I would actually say that these are optimistic numbers. And if we look here at 2030, today is 2023, 15 years, it's a long time away. So from my perspective as exploration geologist, I don't see how we'll meet this demand personally. It's just, there's just not enough good projects out there, and it will take a long time to find something. But that's a good space to be as an investor. It's also interesting to look at demand for oil and gas. What we actually see is that oil and gas operators, they produce these reports every year in terms of fossil fuel demand and what the future will look like. And from their perspective, the future starts to look greener as well. And we can see that their oil projections are going down quite sharply into 2050. And they assume that the energy will come from renewables. And, apologies for that. So they're actually preparing for that scenario and cutting down their investments and have not been really doing much investments over the last years. And I think when we look at the demand for the battery metals and the supply challenges we have, these scenarios are probably also very negative, and we will see higher demand for fossil fuels that we see these days. So that sort of leaves us as a humanity in not the best space when it comes to commodities. And another aspect of that we see is what are the majors doing actually. Their investments are very low. So this graph shows investments in both oil and gas and copper going back to 2012. And in real money, even when they started going up in the last years, as William mentioned, the bottom of the cycle was around 2016. In real money, they're actually trending down. So they are not looking very positive. as I mentioned, I work quite a lot with acquisitions. I also have friends in industries working for majors. And what we see from the miners, a general trend of their production is going to go down. And their plan to solve that is acquire other assets. And I think the last few weeks we started seeing some pretty large acquisitions being announced in the sector. So the way they can increase their production and match the forecasts of needed increased supply is by acquiring other companies. And similar aspect actually happens in oil and gas. So their production curves look actually even steeper. And they want to keep them a little bit, declining a little bit more gentle. So the plan is also to do it through acquisitions. And what it actually does on a global perspective, it creates decreasing production from both metals and oil and gas over the next years. So we are not really creating more supply when companies are just acquiring the assets. And the only way you can add more supply is by exploration. And I have been actually lucky and unlucky. I graduated in 2012 at the top of previous cycle, and it's been a bumpy ride down, as you saw on some of the commodity charts. But it's, I would say the exploration is picking up, but it's picking up very slowly. More in the mining sector, I would say almost not at all in the oil and gas sector. And the challenge we have as humanity, again, is the discovery rates. We maybe all saw these graphs. If you haven't seen these graphs, then they're important to look at. When it comes to oil and gas, there's steady decline in amount of hydrocarbons being found since the 70s. So it sort of stabilized in the last years, but it's staying still at historical lows. So even when we hear about major discoveries in Guyana, in Namibia, they are still historical low numbers. And same picture is for the base metals. This is lead, zinc, copper, and nickel. And we can see that after 2012, there's been a quite dramatic decline in number of discoveries. And even the 2000s period, when significant investments been made in the sector, we had recovery, but also the amount of large discoveries has come down. So if we did this graph actually by resources, it would look more similar to the oil and gas one. The challenge that I probably spend the most time thinking about is the success rates. And in mineral exploration, they are pretty poor. Less than 1 out of 1,000 projects becomes a mine. So this is a pretty difficult number to work against when you're an explorer. In oil and gas industry is better. It's 1 out of 3 projects, 1 out of 3 wells that gets drilled is commercial actually. So this is much better number, but also the size of discoveries is declining. And I think for mining exploration, solving the challenge of 1 out of 1,000 is really critical. And again, to look a little bit at the past, I thought maybe we can learn something from the past, as there was similar picture happening in the 70s. And 70s were characterized about peak oil, peak resources narrative. This is the first time we started talking about this. There was an essay published in 1972 called The Limits to Growth, and that sort of spread across the media, across the television, and people realized that the resources were not finite and we'll run out of them. The demand was really fueled by post-war demand, baby boomers generation coming in, buying houses, buying refrigerators, so quite a lot of both metals and hydrocarbons demand. But very different picture to today. Actually, if we look at the 1950 to 1970, the discoveries were on the rise. Versus today, we're having big demand story, but discoveries are on the decline and at historical lows. So when it comes to the exploration, we're facing a very different picture. And one thing the industry is not really good at is tracking the success rates. And we know the number 1 out of 1,000 for this part of the period. And I was able to find numbers for 50s and 70s. I don't know how good they are, but there are numbers quoted between 1 out of 50 and 1 out of 250, depending on jurisdiction. So it was definitely much easier to make discoveries during that period than it's these days. And also the 2000s, there was big narrative, you know, the discoveries are getting deeper, they're undercover. It's not really easy to walk the ground and find a substantial large ore body to outcrop. So we need to really do things differently as an industry. Going back a little bit to the 70s and Europe, there's actually, we maybe don't know, we were the largest mining producer back in the 1800s, even when it seems unrealistic today. And it's been sharp decline for Europe up to 1970s. And 1970s, 1980s was a period of time where they sort of managed to sustain that little plateau here before the final decline. So that was, I was quite interested, like what was happening in the 70s that helped them to sustain that plateau. And I actually came across the paper from 1984. I give you some quotes from that paper because sometimes the past almost starts to look like a future. One of the quotes is, Britain and Europe can no longer produce raw materials to satisfy their growing economies. So I think we are here. We definitely not producing much as a continent, and we'll have to rely on other sources of metals. And they mine as much material within their own borders and blend with better grade imported ore. So actually what was happening back in the 70s, for instance, ore was imported from Africa and it was mixed with the ore being produced in Sweden, Finland and other parts of Europe. And I think this is maybe something we will also see over the next years. And that one was especially interesting. So in France, Germany, and Austria, mining of iron ore and base metals takes place under government subsidy. So we actually were subsidizing mining industry back in the 70s. And even when it feels a bit abstract, there are changes on the horizon happening actually just this month or last month. So 16th of March, 2023, there is a new Critical Raw Materials Act that's come out from EU. And I would say, normally I'm skeptical about this, but I think this time we start to see at least change and harder push from regulators. So they will do strategic projects. So some of the development and exploration projects across Europe will be classified as strategic, which is supposed to help them both in terms of funding, permitting, and moving faster in terms of development. There are going to be sources of funding to develop mines. They have not been announced yet, but this is the plan. And also there is quite a hard push to accelerate permitting. So the countries are asked to hire more staff into their mining permitting departments and come up with ways to accelerate permitting. And the target is actually for 2 years to permit the strategic projects, which today sounds pretty abstract, but at least there are changes on the horizon and it's worth to follow up on them. And looking for solutions, so what do we need to do to find more resources? From my perspective, it's quite simple. It comes from exploration, and we need to improve success rates. So even if we throw a lot of money at the sector, with the success rates that we have, it's going to be a negative business. So if we can improve success rates, I think things are going to get better for everybody. And that's, of course, a big challenge, how to improve success rates. And myself, as an exploration geologist, I look at a lot of press releases every day, and I see a lot of companies doing not so good drilling. So we could start with drilling in a favorable setting. It's getting more difficult to find large deposits, but they occur in places that have similar characteristics. So instead of focusing on minor occurrences of metals on the surface, we need to use solid geological models. And this is actually an exercise we did for Australia-listed explorers that were drilling during 2022 for nickel exploration. And 53 projects were drilled. These are pure new exploration drilling. And when it comes to nickel drilling, if you want to do major discovery, you should drill on a margin of a craton. Margin of a craton is the area where all major nickel discoveries that are high grade have been made. And it's within 100 kilometers from that margin. Cratons are old continents, so that's something that actually takes 5 to 10 minutes to find on Google if you use Google to search for it. And from these 53 projects, only 21 drilled or 100 kilometers from that margin. So that's 40% of explorers following just one simple basic geological principle. And I really ask myself questions what the other 60% are doing. And we applied some other filters as well that we use in our screening process, and that took us actually to only 5 projects that seem attractive that year. So that eliminates over 90% of the projects. An interesting thing, actually, within these 5 projects, this is where one of the tier 2, so it's not tier 1, but quite significant discovery was made that year. Was within those 5 projects. I think if the whole industry starts to follow good geological workflows, we can improve those success rates. Hopefully start drilling more of those 5 projects than the other remaining. You'll probably hear more about this. I just want to highlight this to you. As I mentioned, I work both in mining and oil and gas industry. And oil and gas industry is probably 3 to 4 years ahead of mining industry on the aspect of big data and AI. And I think last month we all have seen AI everywhere, especially when it comes to big Silicon Valley companies. But as geologists, I must say the geoscience softwares that we use, they were built in 80s and 90s. They are not really designed to work with large amounts of data. We are acquiring more and more data with flying drones, so data is getting cheaper as well. And you need to have proper workflows to work with that data. And at the moment, when you work with classical softwares that mining companies are working, it feels more like riding a bicycle than driving a car, where a car is already available. And this is something that we have been also working ourselves in our company right now. It's been very helpful to speed up our process. Another aspect is exploration strategy. It might be simple, but only few companies does that actually. If you're interested, you can check out our website. I have written a blog post about this with more details. And what is strategy? So when you're an exploration company, you should have some differentiator. What are you doing differently than other exploration companies? And especially related to one critical aspect. As we mentioned, this 1 out of 1,000 success rates. You really need to have a strategy how you're going to beat that. So when you're an explorer, this is your biggest challenge to deal with. And there are some companies that are starting to design strategies in this manner, but also doing it in time and cost-efficient manner will become important as the strategies tend to be quite expensive. I have looked at probably between 500 to 1,000 exploration companies right now, and I would say I can only find a handful that have exploration strategies. I think there's a lot of mistake between exploration strategy and work program on exploration property, and we really need more exploration strategies. I think it would be really interesting. There will be companies that have already made success talking today to hear about how you went about this process. Like what was actually your strategy to getting to that success? Because I'm pretty sure there's a story behind it. And to summarize, basically we're having a bit of a supply and demand story going on in the commodity sector, both across metals and oil and gas. And when it comes to the demand, if you're wondering if new commodity cycle has started, I can tell you as somebody working in the sector that it did, as everything is on the upside and moving upwards. And as somebody that has worked the way down of that cycle, you can really see the change. And if you're not certain, then we're starting to see some major acquisitions happening. There was a bid offer put on tech resources, and this sort of acquisitions only happen at the start to sort of mid part of the commodity cycle. So the game is definitely on. And we have quite high demand for battery metals, but I think even without this, we would be facing shortages across various commodities, as we simply have not been developing and exploring for the last years as we should have. And I think with this quite scary oil and gas industry is planning for energy transition, which means we probably going to also have problem with traditional hydrocarbon energy supply. And the sort of solution to this supply problem for all the major companies is not really focusing on exploration. At the moment, it's happening through acquisitions, and these are the current plans to acquire competitors and sort of fill up your own supply gap. But this is not solving a global problem, and it's probably going to push up metal and I would say also oil and gas prices upwards over the next years. And when it comes to the supply, we saw the 1 out of 1,000 success rate. We're still using old methods as an industry that are unfortunately proven not to work as the success rates are low. But on the upside, there is more technology coming up, and I think we will see changes over the next years, but it's something worth looking at. And I think if you saw the graphs of discoveries, I think they're really scary, as we not only have the demand growing, but we also are at historic lows in all commodities when it comes to discoveries. So exploration will have to kick in at some point of the cycle, and I think after the acquisitions are done of some of the major producers, so we'll see quite a lot of activity in the space. It usually comes in late, but when it comes, it really hits the sector. Thank you so much. Do we have questions? No. Yes, we do.
Questions, because we started a bit late, so we do have a few more minutes, actually, for questions. And I'm going to start off with one, because it just came to mind looking at your supply side chart here. It's junior explorers using old methods proven not to work. You hinted at it. They're using old software, for example. But what are some of the other methods that the companies could improve on?
I think one of the things you see, the soil sampling, also the assays, these things are very inefficient. They take months to get that data. Like sometimes you wait 6 to 9 months for the results. It doesn't really help you speed up your process, and it's not cheap. And there are technologies out there that can speed it up. So we've been looking at ourselves as well on some of those aspects. But I think the entire process, it has not changed much since the sort of 80s and 90s. We added some more geophysics tools on it, but we have not really speeded up and rethink that.
What's your honest opinion on AI?
My honest opinion is there's always double sword, right? So there's a lot of things that don't work, and you sort of produce some shiny blob. We've seen this a lot in oil and gas in some of the early companies. But also, if you can sort of combine it with still using geologist's brain, big data, and understand what the models are doing, it will speed up your processes quite a lot and improve efficiency.
Absolutely.
And I don't like the modern, like the softwares that we use. I really don't like them.
Lots of room for improvement, because Leapfrog and all those
Absolutely.
are older data-based projects, right? I've noticed new commodity cycle, battery metals. What are some of the metals you actually focus on? Because you used nickel as an example. I haven't heard anything about gold, for example.
Yeah, it's a good point. I'm definitely focused more on the base metals. I also do gold. I think there's this saying in the industry, like once you start working with nickel, you cannot go back. And I started working with nickel the first year, and it's a very exciting commodity to work with. So I love to work with. And I think usually what we see when the nickel discovery is made is so rare that the price moves so fast. So the investor side of me
loves it
as well.
Phenomenal. Do we have any questions from the audience for Joanna? Did you hear it?
Yeah, I think I heard your question. It's a good question. I would have to go to too much detail. I share some information on my social media, so you could follow on that. I don't want to say everything, to be honest.
Give away the secret sauce.
Give away all the secret sauce. But I share quite a lot of tips and tricks if you follow me on social media.
Yeah, your Twitter channel is a wealth of knowledge. Equivest.
Yeah.
Equivest Invest.
Yes, that one.
So make sure to follow. You also give short courses
Yeah,
online
I do.
as well. So I highly recommend those, especially if you're newer to investing in junior mining and exploration. I highly recommend that as well. Do you have any more questions from the audience for Joanna?
Question?
Oh, Willem has a question.
Thank you. Nice presentation. You didn't touch on another important topic, and that's so many people retire, so many geologists retire. You're one of the geologists of the younger generation. Isn't that one of the worst problems of the industry?
I would say it's definitely one of the top 5 problems that we have. There's not many people who've been hired over the last 10 years, and we definitely have the skewness on the sort of 50 to 60 range that will retire. But I am also a bit more positive because, if we can automate some of the processes, we do have more technology these days, both in terms of producing mines and exploration. Maybe it can make us faster and more resourceful. But of course, it's going to be a problem down the line. There is more sort of universities starting to flag the issues, and people are starting to come back. So I think there is going to be a next generation, but there are gaps and shortages.
We have one more question here.
Yes. I wonder, since 1900, a lot of metals came out of the ground, and we saw the graph going down from, 50s, 70s down. Mm-hmm. Isn't it so that a lot of metals are being recycled last 50 years? So that's maybe a reason for a crash.
It is definitely recycling, so I think we're improving every year on the recycling. I'm personally, in favor of recycling. If we can recycle, that would be fantastic. We don't need to have all the environmental discussions. Even when I love exploration, I still believe that's the better outcome. The challenge we have with recycling is the costs, and especially the big part of the cost is energy. So when we don't have our energy solved, which we don't have these days, then that's not really helping us with recycling. So it's sort of like you have to solve the energy issue, which is either mining a lot of metals to produce renewables, nuclear, hydrocarbons, whatever you want, but that is actually key to having more recycling.
We have one more question in the back there.
I started
in 2012 with a PhD. We had, I think, 25 students in our earth science program. And from 2012 to 2016, of course, the downturn happened. 2 years ago, there were 4 students. And so we're seeing huge problems with trying to get geologists on the ground from the early stage exploration work. And I don't see that changing anytime soon. But when commodities do start rising, we'll see an influx of students again, but it takes 5 years to get them through the system.
Yeah.
And that's their junior geologists, right? So these swings in the industry are creating big problems with finding.
Absolutely, and I graduated the same year you did, 2012. So it's been a ride, but I think it's also like from my year we were 80, and I did the oil and gas industry even when I went oil and gas degree when I went to mining, From 80 people, we normally would have 90% working in the industry at major operators and so on. It's only 4 of us that works across the industry. The rest of them has some other jobs. So that's been tough years for those people. And I think that also discourages a lot of people if you can choose between normal job versus cyclical job.
Normal job.
You should probably choose a normal job unless you're really passionate.
Fantastic. Joanna, thank you so much for joining us here on stage. And to make sure to follow her and give her an extra hand of applause. Thank you so much. Thank you so much. All right. Now we'll move on to company presentations. We have 4 in this first session this morning, and just a bit of housekeeping as well. Each presentation will be about 20 minutes plus 5 minutes for question and answers. So make sure to write down your questions during the presentation and maybe ask them afterwards, or meet and greet the team outside. I hear they have a table set up outside where you can just meet them, and having met the teams yesterday, I know they don't bite. I don't have any bite marks. So make sure to reach out to them and use that opportunity. I find in mining, and that's one of the reasons I love the industry, CEOs are very approachable. They're often small teams anyway, but you can talk to them and you can get your information firsthand. So make sure to use that. Now, that said, I'm happy to introduce Kit Mars. He's the CEO of Western Alaska Minerals, a company with about 120 million Canadian dollars in market cap, exploring for 5 different metals in 1 major district. So, Kit, I'm really excited to hear your presentation. And here's the clicker pointy thingy. And please go ahead.
Thank you very much, guys. Well, thank you all for being here today. And first, I would like to thank Willem and his team at Commodity Discovery Fund for not only inviting us, but putting on this event. It's a very special to us, so thank you, Willem. So, before I get into the presentation, Willem asked me to discuss just for a few minutes our view of the valuation of Western Alaska Minerals. Valuation of small companies such as ours can be very difficult. So as we go through the presentation, we'll be talking about the mineralized material that we discovered in 2022, last year. And so quickly, it's approximately 3 million tons. You multiply a specific gravity of 3.5, and that's how you arrive at the 3 million tons. And our grade, if you combine the lead, zinc, and the silver, is approximately 25 ounces per ton silver equivalent. Multiply that out, and we discovered approximately 75 million ounces of silver last year. How do you get the final value? That's really up to the market, but in the neighborhood of $2 to $3 an ounce of silver in the ground is a common yardstick. That value increases as we have more and more drilling. So if you take that number and also add the gold resource that we'll talk about briefly during the presentation, that gives a market value of somewhere in the neighborhood of between 150 and 250 million, depending on what values you use. So the other takeaway that we'll talk about today is our deposit, Water Pump Creek. It's what's called a carbonate replacement deposit. That just means the mineralization is hosted by carbonate rocks, limestone, in this case, a dolomite. It's very well known, but less common today type of deposit that was mined in the United States 100 years ago around all the major copper deposits. So most of these deposits are long gone, except in a few areas you'll hear about today, and one is Alaska. So with that, I'd like to go to the cover slide. This gives you an idea of what the area of Alaska looks like that we work in far western Alaska. Low rolling hills. We're not in the Alaska range, so this is a very easy type of terrain to build roads to operate in. Our airstrip is shown in the upper left. That is our normal access other than by winter road. 4,500 feet long. We use that for weekly supply flights and heavy equipment flights. Usual to most exploration projects, this area hosts a past-producing gold mine, the Illinois Creek Mine, and the camp you see in the foreground was previously used when the mine was in year-round operation. So we have some very good Infrastructure, the other thing you might notice that everything is very green. So there's very few rock outcrops. So we have to rely on geology, geophysics, geochemistry, and ultimately drilling to make discoveries. We'll pass by this quickly. So the opportunity we'll talk about today, as I said, is a carbonate replacement deposit. What makes these deposits very unique is, number one, the very, very high grade. So this is a silver, lead, zinc deposit. Approximately 40 to 50% of the value is in the silver, and the rest is split equally between the lead and the zinc. What makes these deposits unique is that you are either in very high-grade mineralization such as this, or you're in white, unmineralized dolomite. There's very little in between. Very easy for a geologist looking at the drill core to say, this is high-grade mineralization. A few examples that are shown there, and see if I can get the pointer to work. There it is. This mineral right here is galena, but in this case it's called argentiferous galena, silver-rich galena. All the silver is contained within that mineral, and it makes it very unique. This ribbon-like texture is very, very unusual, almost a museum quality. So again, these are just examples of what the mineralization looks like, and again, very unique to this style of deposit. So today we'll be talking about a number of important points. Number one, we have a very unique land position, 100% owned by the company, no other competitors. We have a very, very good exploration team, and that's really key to success in this type of an operation. Myself, I'm trained as an economic geologist a few years ago from the University of Arizona in Tucson, where we have our winter business office. The other parts of our team we'll touch in a minute, but principally Joe Pekenbrock, our Chief Exploration Officer. Between Joe and I, we have 75 years plus exploration history of success in Alaska. We'll be talking about our discovery at Water Pump Creek, and I've mentioned already that it's extremely high grade to bonanza grade. Multiple targets, which we'll also talk about in the potential. To locate, we are up here in western Alaska. This slide just shows that we have deep water barge access from the Pacific Northwest to our location, and up to the mouth of the Yukon River, which is down here. We're about 130 miles inland. And so in this case, the river is our marine highway. In a country like the Netherlands and in Amsterdam, everybody in this room very well knows how important waterways are for moving freight. So that is the key to this project. And doesn't seem to be advancing here, so there we go. Some of the infrastructure I mentioned, the Yukon River is shown on the lower left. We use C-130 Hercules aircraft, heavy lift, for bringing in things like drills. Older DC-6 aircraft is shown there, and this is an aerial view of the airstrip. I'd like to just point out Water Pump Creek, our flagship deposit, is actually about 2 kilometers off the north end of the airstrip. We'll mention the targets for 2023, last draw area, and that would actually be trending right along in this area. I'd like to talk about our local hire initiative, which is very important for an ultimate successful operation really throughout the world, but especially in Alaska. We work very closely with the 3 closest native Alaska villages of Nulato, Kaltag, and Galena. Last year, we had 15 different local hires from the region, and our local hire payroll was over $275 million US. Very significant to the economy of the area. When the Illinois Creek Mine was in production in the past, it was the only, and after it's closed, there's been no other major private employer in the area in the last 15 years. I'd like to talk about our stock chart a little bit, since we're here to learn about investing in discovery. Our chart here is an example of what happens when you make a discovery. We went public in 2021 in November at 85 cents a share in the lower left. Continued along, gradually trending upward, completed a private placement financing in May at the price of around $1.20. When we started out, we had a market capitalization of about 30 million. That rose to about 50 million during that financing. The financing funded our 2022 drilling program, which started about right in here. We drilled some excellent intercepts, holes 17 and 18, 47 and 100 meters in thickness. Very, very unusual. Hole 18 was one of the best silver intercepts in the Western Hemisphere last year. So what happens when you make that type of discovery? Well, we're a thinly traded stock, and obviously there was a lot of exuberance in the market. We tripled within a period of a month or less, and then gradually sold off a little bit when some of the shares became free trading, and ended the year at about $3.30. And that is approximately about a 380% increase. Market capitalization shown here. The key takeaway is we have approximately 46 million shares issued, including options, gives us a market capitalization of approximately 145 million. We have participation by 4 well-known institutional investors. Number one, of course, would be the Commodity Discovery Fund, also Crescat Capital out of Denver, Delbrook Capital out of Vancouver, and one of the Sprott investment funds out of California. Our coverage is shown here in the left. Moving along to the next slide. A little bit of comment on the discovery. So, conversations with Willem, I gave him the history of the project, and his comment was, and I think it was very well taken, that after 40 years of very hard work, in 2022, we had a overnight discovery. So that's sort of the way it works in the exploration business. All of the properties that we now own and control were originally discovered by Anaconda Copper Company in 1980 through 84, the Round Top Copper Deposit, Illinois Creek, and just the start of exploration at Water Pump Creek. Just as a little bit of interest, some of the early slides in the 1980s, before there was a larger camp, shown here in the left. The first equipment was brought in a C-130 Hercules on the Yukon River, just was bladed down to the ice and flown in. On the left here is the example or an aerial view of the past producing mine, Illinois Creek. And just wanted to point out, when we went public, our resource of going public was this gold number down here, a little over 500,000 ounces of gold. That was pre-discovery of the Water Pump Creek deposit. Water Pump Creek is so high grade, we instantly changed and pivoted to focus on it. Also, we have a copper deposit, Round Top, which is shown up in here, has some very good value. We focused on Round Top in the 2016 to 19 timeframe, and as copper prices and the demand for copper comes back, this is a sleeping asset that the company has. Key takeaway from the Illinois Creek mine is this shows you can have a fully permitted, fully operational open pit mine in this part of Alaska on our property. So it's a major de-risking element to our company. What is important in discovery? Well, really one of the most important things is the people. So we have an excellent team. I mentioned Joe Pekenbrock, our Chief Exploration Officer, has won awards for a number of discoveries from Canadian mining institutions. One was the Donlin property, which is about 120 miles south of us, and it is the largest undeveloped gold resource in the Western Hemisphere now, approximately 40 million ounces. But we have a very complete team besides those two. We've hired a new geophysicist, Brock Bolin, after a 17-year career with Newmont, including 5 years as their global chief geophysicist, has joined us, and he will be a very important component in our exploration program this summer. So some of the early days of exploration, just want to touch on those. This is an example of the Water Pump Creek area. Pre-discovery. The way these deposits are discovered, a little bit of history. First is what's called stream sediment sampling. Samples are taken of the sediment, analyzed for metals. It's a long process. It takes several years of sampling, follow-up, sampling again, and follow-up. But this is how the Water Pump Creek area was first defined. Mentioned the high-grade examples, and so that really leads to what is the opportunity at Water Pump Creek, and that is to expand what we know as what we believe is just the first little bit of a long finger of mineralization that's very common in this style of deposit. So we've discovered 3 million tons in 1 year. We hope to double or triple that in 2023. Ultimately, this type of deposit worldwide is in the 10 to 30 or as much as 50 million tons, such as the Santa Eulalia deposit in Chihuahua. So I mentioned that deposit. One of our advisors, Peter McGaw, is well known to the Commodity Discovery Fund Group. Peter was the co-founder of Mag Silver, one of the most important discovery stories of a decade ago, and he is known as the world's renowned expert on carbonate replacement deposits. Also on our advisory team is Darwin Green, who will be presenting a little later today. He is the CEO of High Gold and has helped quite a bit in public markets advice and exploration strategy. So I'd like to just expand on the history a little bit. Our company was actually founded by my wife, Joan, and I. Joan is in the front row here, along with Vanessa Bogart, our corporate communications specialist. So we acquired the properties by actually staking the claims that were in the public domain. We incorporated in 2010 and then explored the district as a private company for the next 10, 11 years. At that point, we decided it was time to go public, so we could access the public markets for capital in order to expand our exploration program and take the discovery as fast as we can, and that is the current goal. Whoop. These seem to be a little bit out of order from what I was used to. This just shows some of the early days of soil sampling and exploration in the discovery process. This is in the 1980s. Again, this is before the heavy equipment and road. This is a very small helicopter portable backhoe that's used for trenching to find some of the mineralization. And some of the examples, again, of how this discovery is done. Area totally covered, no rock exposures. Everything is done by geochemistry and science of follow-up. And these are in a very different order. On the right is an example of the Illinois Creek discovery. This is a iron oxide gossan. It was during the follow-up of the stream sediment samples, a geologist using a helicopter landed on this area. It was open, one of the few landing zones in the area, and that became the the Illinois Creek oxide gold mine that I showed earlier. On the left, sort of a interesting slide. This was before we had any heavy equipment and actually used a helicopter to sling the roof trusses up in a building that we were putting up for the geology office. Mentioned the past producing mine. This just is shown in 1996. An example of you can build a gold mine in this area. The key takeaway is just don't go into production at the all-time low of the gold market. In 1997, gold was $270 an ounce. The project went quickly into a negative cash flow and closed after 18 months. But they did produce some gold, as shown here, these doré of gold and silver. Modern exploration is really the change. So after 20, 30 years from the original discovery, we started working in 2020 and 2021. This is one of our geologists, young lady Sage Langston Stewart, who just graduated from Colorado School of Mines a few years ago, and she is now the lead geologist on the Water Pump Creek project. This is an example in 2021 of our sort of rediscovery hole. Again, an example of the extremely high-grade mineralization. Dr. Peter McGaw is shown here on the left. He was on site giving a short course to our technical team the day we drilled into this mineralization, and that really forged Peter's decision to become part of our team. The grade is shown here. I won't go through all the numbers, but this is an example of what sets this deposit apart from others. 0.5 kilo of silver per ton and almost 46% combined lead zinc. So with this type of high grade, you end up with a very small footprint type of deposit, so a very low surface impact from an environmental standpoint, and from an economic standpoint, a very small capital cost to put in production. And it's also an example of a recent discovery in 2019 south of Tucson, the Taylor deposit, Taylor Sunnyside. This 3 years after discovery the company was purchased by South 32 out of Australia for $1.8 billion in cash. And that's an example of the economic leverage this type of deposit can provide. This just shows, again, what we accomplished. Some of the early days of exploration were up here in the oxide area. The 2109 drill hole that changed the focus of our company is right here. And the important takeaway is that last year's drilling extended the mineralization down dip to the south. Gradually, it's about a 15-degree decline or dip. And it just as an example, it shows the tremendous amount of mineralization that we discovered in 1 year of drilling. And as you can see on the upper right hand, it is open going down dip and actually gaining in thickness. So what will we be doing in 2023? The drilling will be two-focused. First of all, we'll have 2 drill rigs that are currently on site. We own our equipment, and so it's ready to go. We'll be starting our drill program May 15th to May 20th. 1 drill rig will be filling in some of the spacing at Water Pump Creek, and the second one will be continuing on to the south to extend the mineralization that I talked about. If we can achieve additional financing this summer, a 3rd drill rig would work on some of the exploration targeting as shown here, and I'll touch on those in a few minutes. Because of time, I won't go through all the rest, but we've completed civil engineering for our road access study. Our metallurgy, which is very important, is ongoing and should be completed in the next month or 2. But this style of deposit, because of the very coarse-grained nature of the mineralization, historically has very, very high recoveries in the plus 90% range. Some of the modern techniques I just want to mention quickly. In the early discovery days, everything was hand-drawn, pre-computer. It takes a lot of work and a lot of training, years of training for a geologist to learn how to think in 3 dimensions. One of the changes of modern exploration, now we're in the computer age, is 3D graphics, and this is an example of a 3-dimensional computer-generated shape for the mineralization, the 3 million tons I mentioned that we discovered last year. And this is how modern resources are defined. These ellipses show targeting that we'll work on this year. The 75 million ounce estimated, and I should say a couple times, we do not have a current resource. This is a geologic estimate of the tons and grade, but any mining analyst would be able to take this information and come up with their own estimate. That little red chili pepper I just showed you in the previous is this area right in here. The purpose of this slide is to show in blue represents a geophysical anomaly that was put together and designed, or not designed, but revealed by Brock Boleen, our geophysicist. This just occurred in February of this year. And in addition, this was a reinterpretation and modeling of data acquired in 2005. This is old 2-dimensional data, and with his skill, created a 3-dimensional model. That 3-dimensional model shows an additional 1.4 kilometer target area. That will be one of the main focus of our drilling this summer, and that would give us the ability, if the mineralization continues to the south, and this geophysical anomaly tells us that it indeed does, we could double or triple the amount of contained silver that we've discovered in 2022. This target area that I just mentioned is shown here in brown. And to show the scale of the area, the Illinois Creek mine that I showed earlier is shown right here, 1 kilometer bar. So we have a 6 to 8 kilometers of distance between the two, and this is part of one big geologic carbonate replacement system. So there is a tremendous potential of targeting in the future. This type of exploration takes money, takes capital, and so that is really the key to how fast you can move and increase your rate of discovery. Again, our targeting in this case shown in this light purple, the discovery of last year is this little area here. So it just gives you an example of the tremendous size of the potential going south along the Water Pump Creek structure. A newly defined Warm Springs target defined by our geophysical analysis is shown in here, and additional targets here, and a porphyry target that is common in this style of carbonate replacement mineralization down in this area. So tremendous amount of targets that have yet to be tested. All of these have the potential for new major discoveries that would take us to that Tier 1 discovery that Willem talked about earlier. And we've covered that, and it seems like the slide deck is going backwards. We'll see if this one works. This will be right on the last slides. It's just an example of two of our geologists, the people involved, and really I want to convey the excitement that they have working on this type of deposit, something that is only happens hopefully at least once in the career of a geologist, to be part of a major discovery such as this. It's a very rare event, and I spent a lot of time explaining to the young geologists, this doesn't happen very often, so please enjoy your time working on this. And again, it's a combination of hard work, of science, patience, and motivation and belief in the discovery. So the discovery process is really something that we've been working on and believe in for the last 40 years, and it's really the definition of Willem's group here, the Discovery Fund. And it's really the ability to find something that other people can't see, and ultimately with a lot of hard work you can do that. So with that, thank you very much, and if we have any time, we'll take a question.
Okay, wonderful presentation. Thank you so much. We don't have time for questions, but you will be around all day. We have 2 meet and greet sessions planned later, just outside during lunch and afterwards as well. Make sure to ask Kit all the questions that are burning under your fingernails.
Okay.
Kit, thank you so much.
We will be here for the next couple of days, so thank you.
Awesome, fantastic. Before we continue, I forgot to mention one thing. All the companies that are presenting here are also nominated for the Discovery Award. Why they're nominated, Terence will tell us later. He's the head of the jury committee here at the CDFund, and he'll run through his report as well and give you the reasons why the companies are nominated. Moving on, we're actually staying in Alaska. We're not moving far. We're moving on to high gold mining, and to President and CEO Darwin Green is joining us. Roughly a 60 million market cap company with great success the last 12, 24 months out there. Spin out happening very soon as well of some of the assets in Timmins and in the Yukon. Definitely worth listening to. And to Darwin, thank you so much for joining us. Take it away.
Thanks, Guy. Thank you all. Thank you, Willem and Terence, for the invitation to be here. It's a real privilege to be able to present our story. And this is pretty cool. I've never had one of these kind of headsets. I feel like I'm doing a TED Talks here, so well done on the professional deal. So I'm going to present on high gold. High gold, we're called high gold for a reason. We're focused on high-grade gold or very rich gold systems. When I was invited, they suggested that I customize the talk to more of a retail or generalist crowd because, we're fundamentally a very technical business. We talk about technical things, and it tends to bore guys. So what I've tried to do here is mix it up a little bit and provide a little bit of a front end on the why and the how of investing in junior miners and use high gold as a bit of a case study because it's my favorite pick. So, very, very high level, There's two principal ways of investing in gold. You can buy physical gold or a line on physical gold through ETFs or what have you. That's really to preserve your wealth and preserve your buying power. I've heard it best by describing, 100 years ago, you could buy a really nice suit with an ounce of gold, US dollars, $30 or so. Today, you can still buy a really nice suit with an ounce of gold, but it's going to cost you about $2,000. But if you want to create wealth, you want to actually create real value, that's in buying shares of gold miners and gold explorers. And in our view, explorers advancing that next generation of gold mines offers the biggest, greatest leverage and upside. It's the most exciting place to be, and it's a great place to be in a rising gold market. The trick is, I think, as an investor, is really understanding your comfort zone. Not everyone's comfortable with real high risk. And what I put here is just a very simplistic chart. On the vertical axis is risk, from low to high, and on the horizontal axis is reward. So, nothing, we'd all love to have low risk and high reward. It doesn't really exist. So in the low risk, low reward corner, you have the producers and the royalty companies. Great place to be still. And when the price of gold rises, these things rise quite nicely. You can get double your money. The slightly less risk, or slightly more risk, pardon me, and slightly more reward is in the developer category, where there's an established resource there, so you have something. And ultimately, those things do very well in rising gold markets and when there's M&A or takeover activity. And then ultimately, on the explorer side, you get the maximum torque and leverage to discovery. And that's really driven by the drill bit, by the type of, like Kit's last presentation, with making that new discovery and that growth. And what high gold offers is a little bit of both. We have a real asset and a real resource. It's a high quality resource, but we also still offer that leverage to the exploration side. So for us, it makes a good place to be investing. This sounds pretty simple, but really these are the key elements. You want to start with good people, great projects, and great jurisdictions. Jurisdictions do matter because you get bigger multiples when the takeover happens. People like more stable environments to develop mines. We all look for value in this, but keep in mind a high share price doesn't always mean it, or a low share price doesn't always mean good value. It really depends on the asset itself and ranking that value against the asset. And you need to be well funded. We're a business where cash is our fuel. We spend money, we don't make money, so it's critical that the companies you're investing in have that exposure or have that financing to be able to get the job done. So just looking at people, for us, our group is very experienced in what we do. We focus on jurisdictions we know well and deposit types that we know well. And collectively, we've been involved with several discoveries. Our senior vice president of exploration, who really designs the drill programs, he was involved with this discovery that was a tier 1 discovery that was taken over for $2.3 billion. Similarly, our board, very accomplished board, very diverse. I won't spend too long talking about it, but this is really important to be looking at when you're evaluating companies. This is a slide that sometimes you'll see at the back of some people's decks, sometimes at the front. It's actually a critically important slide. Every company should have it in their presentation. Not only does it tell you how much cash and what the value of the company is, it really tells you who the endorsement of the asset and of the people. So you're looking at the shareholders up here. In our case, we have a senior gold producer. That's our single largest shareholder at 9.9%. That's one of the top 3 global gold producers who's invested in us, not necessarily because we have a senior producer size deposit yet, but because they believe it can become that. Similarly, on the institutions, top-notch U.S. institutions that are very experienced in this business. So, they've got armies of people evaluating things, so theoretically, they're doing your due diligence for you, as well as other kind of notable mining types. And we do have research coverage and newsletter coverage as well. So, looking at the assets, we are North American focused. Our principal or flagship asset is the Johnson Tract. It's located in Alaska. It's a very sort of accessible coastal part of Alaska, near to Anchorage and some communities where there's a workforce. We've been able to establish a high-grade deposit that's just a little bit more than 1 million ounces gold equivalent at 9.5 or 9.4 grams per ton gold equivalent. It is polymetallic, meaning it has gold plus other metals, in our case copper and zinc, which are nice sort of energy transition metals to be involved with. In addition to that, we've got a portfolio of properties in the Timmins camp. This is Canada's #1 gold-producing jurisdiction. There's an old adage in our business, a good place to find a mine is next to another mine, and that's got more mines, per square kilometer than anywhere else in Canada. And we've got a massive land position there, as well as a large land position in the Yukon, which is an area where there's been a new discovery made right next door to us that's really opened up that area. And what we're doing now, we've got this kind of wealth of assets that we've been advancing. We're actually going to spin out our Canadian assets into a new vehicle. It's going to be called Onyx Gold. And the reason we're doing that is basically because we have one dominant asset that's carrying all the value of the company, and it's overshadowing the value of those other assets. So this gives us an opportunity to daylight that value and create real value without doing that much work. It's kind of, in this business, you can create value through the drill intersections or transactions, and this is a creative way of kind of unlocking value for our existing shareholders. So the way it works is a shareholder who buys shares today, come mid-June, we will spin out and dividend out shares of the new co. So you'll be able to keep your high gold shares, plus you get new shares in the new company. Part of the reason for doing this, not just unlocking value, it allows us to focus, now that we have something real, we can focus all of High Gold's energy on making that discovery, turning it into a mine, essentially, or getting it to the point that it's going to be a mine. It also helps align investors. Some investors, when I went back to that earlier slide, like that really speculative, early-stage, discovery-focused exploration. Others prefer something that has an established resource. So it better aligns that, and it certainly opens up more avenues for financing. So going forwards, we expect 2023 to be a very busy year. This allows us to be incredibly active on all fronts. All projects will see drilling this year. And that'll be starting up in a couple of months' time. Looking at Johnson Tract, I'll walk through Johnson Tract here, our Alaskan asset first, and then in the back end I'll talk about what our plans are for the Yukon and Ontario. But in Alaska, we really are going to be building value in two ways. One is building that value with the drill bit. We have something real. We want to keep growing that deposit. We made another discovery about 4 kilometers away on the property, so we're going to hit that hard. We think it's another deposit in the making, and by the end of this year, we want to have a resource there. We also have a pipeline of other prospects that we're going to keep advancing and get them to the drill-ready stage and perhaps make a third or fourth deposit discovery. Concurrent with that, we're going to be busy doing the boring stuff, the engineering, the environmental baseline work, the permitting, advancing the project so that we can, when we know we have a mine, we can be a lot quicker in making the decision to develop it. So projects like Johnson Tract are really fun as a geologist to work on because it drills there's some absolutely outstanding mineralization there. We've drilled some of the best drill holes globally over the last 3 years. We've been on the top 10 list prepared by OPAX. OPAX is an Australian sort of mining database company that compiles global drill intersections, and they rank them at the year end. And we've been on that for the last 3 years. Interestingly, we've been on it from both our main deposit and this new discovery we made. And really, that's just telling you, when you're drilling some of the biggest, longest intersections, it's a good place to be exploring and developing deposits. This seems to have a mind of its own and advance independently here, sorry. But so with those intersections, what we've been able to generate is a really high-quality deposit. And what I mean by that is we've had this rare combination of both high-grade and very thick. It's about 10 times the average thickness for a high-grade deposit. And what that means is it's going to be high-value ore and lower cost to mine. The thicker your deposit, generally the lower cost it is to mine, and that's, it doesn't take a rocket scientist to realize that's good for margin and mineability. It clearly has the potential for scale to grow. We already have found a second deposit. We think there's more to be found. Lastly, and equally important to all of the other criteria, is can you permit and build? Do you have the social license to develop a mine? And in our situation, we're actually leasing the land. The mineral rights in the land is owned by a corporation that's owned by Alaskan Native groups. Wonderful professional groups to work with, and it feels good to know that some of the revenues generated from a project like this will flow to the indigenous people that live in the region. We're not at a point of knowing we have a mine yet, but we're looking ahead to is it a mine? And one of the neat aspects about this property is it has some optionality from a development standpoint. You can build a conventional standalone mine where you have all the mill and the tailings and waste rock and everything on site. But because our grade is so high and because we're sitting right on tidewater, it does offer up the option to basically barge your ore somewhere else to an existing mine that's on the coast to process. And the advantage of that is that it reduces your upfront capital to build your mine significantly, so it's a lower hurdle to get a project into production. It certainly will make it simpler and quicker to permit, and it leverages existing resources elsewhere. I'm not saying that's the route we'll go, but we like it from the optionality and sort of protecting an investment because it means we have a lower hurdle rate likely to get this thing online. And you know, it's funny sitting in the hotel here looking out the window and seeing the barges go up and down the river. I think this is a foreign concept to many, but in a place like this where there's so much marine transport, it's a good way to go. This is just a barge mobilizing our equipment, our drills at the start of the year. We pull things in by barge and then we hop them off with a helicopter right now. This is a shot of the lay of the land, and it's just highlighting our proximity to that coast. We're not literally on the coast, but it's about 15 miles of road you'd have to build through fairly gentle terrain. All the snow and ice you see off to the west is largely off the property. So, you know, that's an advantage. These things all matter. Can you actually, all well and good to find a great deposit, but you know, where it's located and being able to get it out of the ground and to market is a key part of whether it becomes a mine or not. Looking at our exploration upside now, this is a map of, it shows a trend that's about 10 kilometers plus long. All these red blotches here are big alteration zones, and the call-outs here of different areas of mineralization we've found. So main deposit, Johnson Tract, sits down here. 4 kilometers to the northeast is the new Ellis zone. This was a really significant discovery because it told us that this property had the potential to host multiple deposits. So you'll hear people describe their project as having district-scale potential. All that means is it has the ability to host multiple deposits over a broad area, which we've already proven, and now we're trying to advance more of those concurrently. So looking at the main deposit, this is a slice through the mountain here from surface. One of the things we're looking at doing is actually developing some underground access, basically tunnel into the bottom of the deposit. What this does is it opens up a lot more terrain to explore because it gets deep and expensive to drill from surface, so it gives us that ability to keep drilling it to depth. It allows us to upgrade the known resource. It also leaves us with some wonderful infrastructure to transition into a mine, so it would be like a down payment on your mine in a way because you've already built the access in there. That's a multi-year plan that'll take us a couple of years or more to get that in, but we're working on that process right now. In the meantime, one of our big focuses this summer is the Ellis zone. This was a new discovery. Last year, we got 35 holes into it. It took fairly modest step-outs, and we've been able to show that it's got continuity and great grade. We have 7 intersections that are better than 100 gram meter. And that means something to guys like Terrence at Commodity Discovery Fund, because generally, systems that generate those types of intersections are ones that have much better odds of ultimately becoming a large deposit, tier 1 type system. So our mandate this summer is going to be stepping out from this to keep expanding that resource, and at the end of the season's drilling, when we have all those results back, we'll get a resource on it. This is just a colorful map of geophysics. Really what this one's talking to is the fact that we've got our main deposit up here, and you can see that the patterns of low magnetics and high conductivity are replicated down here to the south. There was a couple of holes from the 90s that were on the fringes of this that hit stuff that looked very similar to stuff we find very net close to the main deposit. So this is one of these areas that we're going to put a few holes into, and you can have that third deposit discovery. But we don't know until we drill it. This is exploration. Okay, so now I guess part 2 or part 3, switching to Yukon and Ontario. So this is the spin-out, one of the spin-out assets. And one of the catalysts for us spinning this out is actually a very early stage project that we've had for about 10 years that sits at the very east end of what's called the Tombstone Gold Belt, shown here in pink. And what that is a concentration of intrusion granite-related deposits that are very big, but often quite low grade. What happened was there was a discovery made out here last year of one that's about 3 or 4 times the average or typical grade of these systems. And that means something because, one, it's generally better economics, but also given the remoteness up here, it's important to have that grade. And so what that's led to is us dusting off this project we've had, where we've had one of these at basically drill-ready projects ready to go. And this here is just a map. It's a claim map, for scale, 20 kilometers. Sorry, this thing's dying on me. Valley Discovery up here is the big new discovery, like maybe 25 holes. You can probably see 7 to 10 million ounces already. It's a massive new discovery. Their claim blocks are both north and south of us, and the King Tut you can see there in the middle, we have something that's like a look-alike for that system. This, just zooming in on it, this is a map. It's about 20 kilometers east-west here for reference. Bright colors here represent soil samples. It's one of the early stage techniques you use in mineral exploration, where you actually go out and you collect a grid pattern of dirt when you can't see the rocks below you, and you analyze them for their chemistry, and if you see gold or copper or other elements, it tells you there's probably a mineralized system below you. It doesn't guarantee it's an ore deposit, but clearly that gold that's kicked up here is from something that's below the soil cover. What we have at that gold mass, for example, is it looks small here, but it's 1 kilometer by 1 kilometer, very high-grade golden soils sitting on top of intrusion that looks exactly like Snowline, the Valley Discovery looked before they drilled it. Can I guarantee you're going to drill the same kind of intersections they did? No, but that's what we do in this business. We test these types of targets. And in addition to that, we have the main Tut, which is multi-kilometers long, and we have several other properties as well. So we'll be drilling that this summer. We will also be in the Timmins camp. This, for reference, is about 100 to 120 kilometers east-west. It's a very big image here. So these are massive land positions covering really good geology in an area that's known to produce multiple deposits in areas that are underexplored. We spent several years consolidating land. Then we started drilling last year. We actually made a discovery, but last year was a terrible market for discoveries. And so we got no reaction to it, but we're excited about getting onto this one as well. So just to wrap things up, why high and why now? I mean, we think we do offer a pretty unique opportunity of a 2-for-1 type investment. You buy high gold, you're going to get shares of this new spin-out. The main vehicle is going to focus in on our high-quality, high-grade resource with lots of drilling in front of us and a path towards, in our view. We think we have visibility on this eventually becoming a mine. We've got a lot of work to prove that, but that's our agenda. And a spin-out that's got great properties and great jurisdictions, strong treasury, and we're cheap. Thank you very much.
Well done, sir. Well done.
My pleasure.
Thanks, Darwin. I think we have a few minutes for questions, so stay on stage, stay in the light. Stay in the lights. It's all about you, not me. Do we have any questions from the audience for Darwin and about their project, the Johnson Tract project? We have one from Terrence.
Uh-oh, it's going to be a tough one.
He's the head of the jury committee, so it's going to be tough.
Darwin, I have a question you might not want to answer, but we're always looking for big deposits. You refer to JT as high margin, high grade. Does it have high volume in terms of the sizes that we look for, i.e., is it a tier 2 deposit, or does it have that potential?
Well, for us, that's why we're exploring. That is the question mark. I can't say the name of that. Our senior gold producer, who has a 9.9%, isn't there for just 1 million ounces. They're there for something significantly larger. Typically, when you find good mineralization like we have, there's generally more around, and that's what we're trying to do. We think there's reasonable prospects of this being something that works as is, but it's a lot more exciting if we can continue to grow it. And that's exactly what we're doing in terms of both. You can do that 2 ways, finding other adjacent deposits as part of a sort of a camp and build collectively or cumulatively the ounces. And that's where the Ellis Zone comes in. And this year we're going to test the South Valley that really does look like a look-alike. There is a faulted offset component of the resource that you may remember that we failed to hit from surface. That's part of the rationale for getting underground, is to keep chasing that. So I guess in our view, yes, that's why we're putting majority of our budget to drilling and not just sort of engineering and environmental baseline work.
Fantastic. Do we have any more questions from the audience for Darwin? Great, I have one. Okay. What's the timeline on drilling? When can you move in, and when can we expect exploration news flow?
Yeah, so we expect to have the drills turning the first week of July in Alaska. In the Yukon, that will likely be end of July, and then in Ontario will be sometime in the fall. In Alaska, we did something a little different last year. We actually built our own on-site lab prep facility where we crushed and pulverized the rock. There's been a real bottleneck in our space, as I'm sure you're well aware, where it's taking months and months to get your results back. And when you have a seasonal project, that's tough because you want to get those results to guide your follow-up drilling. So we put in a lot of expense to build our own lab. The analysis is still done off-site, but it actually gets you right to the front of the queue. So we get sort of 6-week type turnaround instead of 4-month turnaround.
Fantastic. You have $60 million in the treasury, roughly. How much are you going to spend this year?
Yeah, we're still finalizing that, but we're going to spend a good chunk of it. It'll be a plus $10 million program this year. Yeah.
Oh, fantastic.
Yeah.
Awesome. Darwin, do we have any more questions for Darwin? Thought I saw a hand go up. No, we're good. Fantastic. Darwin,
Great.
thank you so much for joining us, and we'll see you later. Now we're jumping continents. We're jumping over to Africa, and we're joined by Benoit Lassalle. He's the president and CEO over at Aya Gold and Silver. The company's already a producer. They have a market cap of $1.2 billion, but they keep making discoveries, massive discoveries. One of their holes is 21.6 meters of 3,900 and something grams, like 4 kilos of silver over 21 meters. I haven't even seen that coming out of Mexico. So absolutely astonishing. And Benoit, I'm really pleased to have you welcome on or join us on stage and present the story to us. Thank you so much.
Good morning, everybody. Willem, thank you for inviting us, Willem and company, and thank you for making us part of your family. Aya is an amazing story. It's only 3 years old. We started 3 years ago, yesterday, April 24th, 2020, beginning of COVID. We were all home. We had retired. In 1995, I went to Africa on a pro bono trip to help kids and children. And as I'm for the official picture with the president of Burkina Faso, he says, would you come back and help us develop the mining sector? We don't have mines in Burkina Faso. So I said, Mr. President, I'll see what I can do. I'm a tax specialist. I'm an accountant. I have my own practice. I don't know mining. And he says, could you come back? And I said, I will. And I created a company called West Africa Mining Corporation, in French, Société d'Exploration Minière Afrique de l'Ouest, SEMAFO. Created that myself, hired a geo, and in 20 years, we took it to 3.5 billion market cap, 3,000 employees, the SEMAFO Foundation with 1 million people living off the charity. And we sold the company in 2018 to Endeavour Gold, and everybody went home happy until I got a call one day, and they said, would you take over this company, which is in bankruptcy, called Aya. At the time, it was called Maya. And I said, yeah, everybody is around. I've got hundreds of guys willing to work. And we took over this company, and it's been TSX 30 for the past 3 years, the best performer. So I'm glad we're in your fund because we have, had quite a ride. The looking forward statement, you're familiar. So we are Morocco-focused. We are silver, pure silver, and you do want to be in silver right now. Silver today is the breaking out day. People were waiting for COMEX, for London today, where the contracts are closing. And as of today, technically, it should start to move up. So we're Morocco-focused, silver-focused, fantastic growth profile. You have a company that is green. We're the leaders in climate change, and we did receive a $100 million fund from the EBRD Bank because we are a leader in climate change, and we're very strong management and strong board, and I'll come to that. So the management team that you have here is SEMAFO. David made all the discoveries. We talked about geologists. He made all the discoveries at Bima Gold that became Kinross in Russia. Then he came with us at SEMAFO, and he made all the Burkina Faso. We discovered the Houndé Belt, where you have now 10 mines on the Houndé Belt. David did that with me. Mustafa ran OCP, the largest phosphate producer in the world, in Morocco. 11 billion a year in revenue, 5 billion a year in profit. He joined us when we took over Aya. Hugo, Elias, they're all part of the SEMAFO family. Everybody cashed out. We got taken out by Endeavour. And now everybody came back in 2020. And we took this company from 100 employees to today 800, 40 geos working under David, and it's probably now 45, because every week he's hiring, and we're growing this company into the next multi-billion-dollar company. What's interesting is at the board level, the board owns 52% of the company. So that's very rare in mining. We own 52% of this $1.2 billion company. And going up. So, you know, Roberto, biotech billionaire, Marc Nollet, industrial billionaire, Nicolas Sofronis, fund manager. So you have a team, and funny enough, Willem, Natasha, who was with me at Semifo, is now the CFO of Battery Material, your famous investment where you went from $1 to $14. Natasha was with us at Semifo, did very well, went to Champion Iron Ore, took it from 300 million to 4 billion, and was poached to go to Battery Material. So she's on the board with us, and my business partner and myself, and we are building this new project at 3,000 meters above sea level. This is the mine. It's in production. We're producing this year 2 million ounces of this beautiful product called an ounce of silver. So we're producing 2 million ounces this year, and this time next year, we'll be producing 8 million ounces a year of silver at an all-in cash, all-in AISC of $9.50. So this is how it was put together. The key element, if you come out of here, is jurisdiction. Jurisdiction is the most important element of investment right now, because Panama's gone crazy, Madagascar's gone crazy, Zimbabwe's gone crazy, Quebec's almost there yet, but going very quickly at going crazy, and it's wrong. I mean, if you're investing and you're in Panama and you're in Cobre Panama, and all of a sudden the government says time out, we want a new deal, it's complicated. So jurisdiction is everything for us. Morocco is ranked, whoops, sorry, I just went too fast. Morocco is ranked number 2 in the world now by the Fraser Institute, and shortly it'll be ranked number 1. Best jurisdiction in the world for mining. Permitting takes 2-3 months. Once you have your permit for mining, you're set for life. And exploration permits are renewed every 4 years. It's extremely simple. It's 3% royalty, 25% tax rate. And why you want to be with us? If I told you it's 1900, you want to come with us? We're going to explore the Carlin Trend in Nevada. It's 1900. You want to come? Of course you want to come. We found 300 million ounces. In Morocco, the belt was shut down in 1914 by the king. He said nobody can do exploration in Morocco except the government, because we have phosphate. We have the largest phosphate reserves in the world, and we don't want to give it up to anyone. So no exploration in country except for the government. And they've only reopened up in 2010 when this company was created, and this is why it's such an interesting thing. So this belt, the Carlin Trend, 60 miles long, 100 kilometers. The Cadillac Break in Quebec, Timmins, 200, maybe 300. This fault, 1,600 kilometer long, 65% of it has never been walked. The discoveries that were made there were made by the Romans 2,000 years ago. So when we arrived, it's like it's discovered. It's there. It's the highest grade silver in the world. It's pure silver. Our mine is pure silver. No lead, no zinc, no copper, no arsenic. Pure silver. So that belt is going to be known in the next 10 years as one of the top belts in the world. If I ask all of you, what is the best silver mine in the world? You'll say, oh, it's in Mexico, oh, it's in Peru, it's in Chile, it's in Russia. This mine here, owned by the state, has got 400 million ounces of pure silver. It produces 5 million ounces a year of pure silver, and it's been producing for 50 years. And it still has 20-year mine life. So and that's that belt. That's the belt in Morocco, and it's not bad because you can surf here all year around. You can ski here. Ouarzazate is the Hollywood of filming, and the food is not bad either. So you know what? From Burkina Faso or Mali, where we were, Niger, or anywhere in Africa, it's actually pretty good for a last gig. So It's actually quite impressive. So we are a pure silver play. We're a pure silver company. Now, interesting, we only have 116 million shares. That's it. There's no more money to be raised. We have 112 in the bank. We have a $100 million facility that we haven't utilized, which is an ESG loan, 7%, 6 years from the European Development Bank. And as I mentioned to you, we have 52% of that at the board between the board members and management. We have 52% of it. So it's today actually it's 1.2 billion market cap, but it's only the beginning of where we're going. So when we took over, it was bankrupt. It was a broken company. They were producing a little bit. It was the beginning of COVID, and we started fixing the plants, fixing the mining, the underground mine, the 2 plants that we have. And now last quarter, we produced 680,000 ounces last quarter. We were cash flow positive and profitable last year. We're cash flow positive and profitable this year. And next year, at 8 million ounces a year, we're generating at $25 silver, less $10 all costs, 15 EBITDA per ounce, times 8 million, 120 million a year. With that, we maximize exploration. Because the value creation here, there's one rule in mining. And, you know, I'm not from this. I'm an accountant. But I've understood there's one rule. It's ounces per share. Because there's a lot of M&A where they grow ounces, but they quadruple the shares. Ounces per share is the only metric that counts. The only metrics. And here we came in, we had 10 million. One campaign, 44 million ounces of silver. One campaign, 96 million ounces of silver. This year we're going to come out at about 400 million ounces. Always the same share count. Except we did a small financing recently. We went out for 70 million because we're building a mine. The management, the board wanted to put 20, but we only put 5 because the demand for our 70 million financing was $300 million of demand. And so it really was an oversubscribed deal. So we cut the board, we cut everybody down to 70, and then we upsized it to 90 million. But that metrics is the only thing that counts. How many shares? How many ounces per shares? Growing over time. Best hits of the industry. 21 meter at 4,000, 14 at 4, 9 at 5. If you look at the top intercepts, it's either us or Abra that we'll talk about right after us. These are the best intercepts. In December, we were mining 3,000 grams per ton all the month. We stopped the plant halfway through. We were through our guidance. Our cost was so low. We stopped the plant. We did all the maintenance that we're going to do in 2023. We did it in 2022 because we're mining 3,000 grams per ton the whole month. So it's a very high-grade system that we have, and it's not a vein. It's a sponge. So it's quite predictable. So this is our own block model. It's got like from 8 meters at 1,500 to 4,000 grams over 21 meters, and it's on and on and on every day. We currently have 11 drills turning. We're drilling 68,000 meters in the first 6 months. We're probably going to drill another 60,000 in the next 6 months. We'll finish the year close to 90 or 100,000 meters of drilling, and we'll go from 11 drills to 14 drills this summer, and then we're just going to accelerate that. Because I think we're going from 100 million to 400 million to maybe 1 billion ounces in 2 years. And that is just in drilling. And that's how you create value. So as I said, we're at like 96 million right now at 300 grams per ton silver, not silver equivalent, silver. And we have 6 million in inferred. We really have very little inferred. So what we did is we said, well, since we have so much, let's build a new plant. We already have 2 plants. Let's build a 3rd plant. So we're building it right now. It's a CapEx of 139. It's about 40% built, 95% committed. We're on time and on budget. It's going to be up and running this time next year, which will take our production from 2 million to 8 million ounces. The beauty of Morocco is like you're on Mars. There's not one tree. There's not one scorpion, not one snake, not one mosquito. There's nothing. There's geology. That's it. I mean, I've worked in Africa where, you know, you cross over snakes every morning, and this has got nothing. Nothing. Geology. You walk on it and you track it for kilometers and kilometers and kilometers. It's really, really a beautiful place to work. This is our new plant. Go on our website. We have videos every month with drones filming the construction, the equipment arriving, the team growing. It's very, very interesting. So this is the construction right now. And we're using the topography for the plant to be efficient. So a similar plant in Canada would cost 300 million, 350. In Morocco, 140. And again, in mining, people get killed on capex. I'm sure you were stuck in Nemaska, I hope not, but in Nemaska or IAMGOLD or stories where the capex went from this to there, and then you have no more return on your assets or no more NAV. Here, the capex is 140. We're using the topography, and this is being built as we speak, and that will be producing 8 million ounces at this time next year. So the beauty of a project too, and we talked about that, to me there's 3 elements that counts in mining. 3 elements: jurisdiction, grade, and the management team. Grade is so important, and you have fantastic grade. I saw that. I have to applaud your grade in Alaska. It's really amazing to have grades like that, because look at grade. $16 silver, 21% IRR. Some people are showing us IRR at top values, and they have 15. And they say we're going into production. Never it's going to work. Never. At $36 silver, which I think we're going to be, we have 117% IRR and a 6-month payback. And at Semifo, when we built Mana in Burkina Faso, it was a similar project. We did all our numbers at $600 gold, and then we were at $1,200, $1,400, $1,500. We were making $200 million profit every year, and the capex had been $140. So when you hit it right, which is very, very difficult, the return is fantastic because your capex is such, your return is there, and once you pay it back, then it's pure profit for 10, 12, 15 years. So we're going to pass this. Just on emission, in Morocco, the beauty of the grid is green. So all of our power is wind. So we're getting grid power that is green at 7 cents per kilowatt hour. So in Morocco, you have water infrastructure, you have, of course, transport infrastructure, airport, and power infrastructure. Once you've got that covered, after that, it's execution. Very important now, and especially for us now who have gone to the billion-dollar market cap. I was in Boston last week and New York meeting all these multi-billion-dollar funds. And we spend everything on governance. How many women, directors, who is following you, how is your ESG reporting, your CSR reporting. So we cover all of that. We did it at Semifo. Semifo, we were runner-up on ESG for a Nobel Prize. We presented in Sweden, and so we have the same team. I brought the same team over, and we're following the same pattern. But the value of all this, and why you're a shareholder in this fund, and why Willem is keeping with us, it's only about exploration. And exploration of that belt, but exploration of Zgounder, and exploration of Boumadine. Why Zgounder is so important? Because look, 106 million ounces is what's in color here. That's the block model. This is 1.4 kilometer long. It's mineralized all the way to the fault here, and all the way to the granite. It's a hydrothermal fluids, and it's a sponge. It's 1.4 kilometer long, it's 20 meter thick, 700 meter deep. It's always there. We always mine ore, always. And they've been mining this for 2,000 years. So when we arrived, there was 36 kilometers of galleries that had been built over time. And now see these blue lines are all our drill program. We're putting 26,000 meters of drilling here right now. We have 6 drills turning, and at the end of this year, we will move the needle from 100 million ounces to about 150, and that will be that first structure. So keep in mind this, and let me show you this. So what you saw there is this, and this is our ground, and these are the 27 outcrop anomalies that we have with gold, copper, silver. So we're drilling 7,000 meters right now up here. We're preparing this for drilling this fall. We're drilling over here, and we think we're going to find 2, 3, 4, or we don't know how many, satellite pits that are going to come and increase our production from 8 million to 10 million to 12 million coming from satellite pits. So we're spending, and the beauty is because we're cash flow positive, we can spend almost whatever amount of money we want because we're generating cash next year, about 120 million. So this year we'll be spending 40, 50 million in exploration, but next year, if we have even to double up, we could do that. But our thinking here is really to come and identify satellite pit here, there, and there. Now, we're using technology. Everything is technology. Everybody is working off their computer, and we're using a lot of geophysics. We bought some technology out of Germany. We brought the whole team over to Morocco for a month, and we've flown geophysics, which is really, this is where the mine is. So all this blue rock is the intrusion. We're using it to the north. So we're using landside imaging, satellite imaging, in artificial intelligence. I mean, we are at the forefront of technology in our exploration program. And while we were doing Zgounder, I told the team, why don't you guys do Boumadine and see what it's going to look like with all the same tools? It's another asset that we have in the portfolio. So we did that, and bang. So they had been working here 400 years. 400 years, little mine, a plant, producing copper, gold, silver, lead, zinc, just a little plant. We did the geophysics. It's a huge intrusion, which is mineralized along the wall here, all across. So you see it goes up and down like that. Currently, we know we have 3.4 kilometers of a plywood, a slab, which is 2 to 30 meters thick, which is 3.4 kilometers long, which is 600 meters deep. And as we speak, right now, we're drilling 400 meters lower. This is a fence to look at the continuation of this. We have 8 banks covering us. 7 of them don't take Boumadine into their calculation, and they give us price targets of between $12 and $15. We're trading now at 10. And we have 1 bank that takes Boumadine into account for 200 million ounces of silver, and they gave us a price target of 17. And last week, National Bank was with us in Boston and New York. Coming back, they said Boumadine today, in their numbers, back of the envelope, is at least worth 500 million. But Boumadine, once we start doing the resource number, which will come out next year in January or February before BMO, it's going to add hundreds of millions of ounces of silver. So it's very interesting, and it's permitted. We have a mining permit because it was a mine for 400 years, so it's permitted. So we have that here. We can put this into production whenever we're ready. We're going to do pre-fees and fees, and we're going to look at it, but it'll be ready to go anytime we want. And our banker that just gave us 100 million has already committed to give us 300 million on this one. So it's very, very quick for us to take that to production. So, okay, some of you will like this, the longitudinal section. It's really well mineralized deep. And we also have another permit right beside the government's mine here that's got 400 million ounces, which is very well, lots of veins. But for us, it's kind of a third project. So this is our story. Very straightforward. We own 52%. We put 5 million in the last deal of 92 million. So insider buying, William was saying, management involved, great jurisdiction, fantastic grade, cash flow positive, no more financing, and benefiting from the silver price. And I'll close on that. Our stock price will follow the silver price. If silver goes to 30, we'll probably go to 20. When silver goes to 40, we'll go to 30, 35. And when silver hits 50, we will be at 50. It's just mathematics. Is 8 million ounces, $10 cash cost, $50 selling price, $40 an ounce profit, times 8 million is 320 million US. In Canadian, it's 400. Give it a multiple of 10. You'll have a $4 billion market cap, so we'll have a $40 stock price. So, and that doesn't take into account Boumadine, which will grow to be $500 to $1 billion value. So again, very simple story, and maybe I can show you a picture to close. This is what we scrape off the wall. This is 6 kilos of silver. When we open the walls, we have to send people with bars because they take the silver off the wall, and because we have these like stalactic silver veins that are there within the sponge, which we take off. So before we arrive, of course, all that never made it to the plant. Everybody went home with that stuff. But now we have cameras, we have systems, and we control everything. And it doesn't go home anymore, except if it comes to me, and that's why we have it here. So, which is not true. And don't worry, Willem, we have a good control system. So this is the story. We're clean, we're funded, we're good to go, and we're building. It'll be ready next year, and you'll have every month exploration results coming out. And so far, both Zgounder and Boumadine have fantastic grade, fantastic exploration results. Thank you.
Wonderful presentation, Benoit. Thank you so much. Very engaging. I loved it. We do have a few minutes or a couple minutes for questions. Do we have any questions from the audience? I see a hand back there. Just wait for the microphone real quick so that we can all hear you.
Thank you very much. The neighboring countries of Morocco, right, Tunisia, Algeria, are suffering a little bit of civil instability, you could say. What about Morocco?
Okay, how long do we have? Okay, what's happening in the world right now is there's a war in Ukraine. The same war is in Africa. Russia took over Mali. Russia took over Burkina. Russia took over Chad. Took over Algeria. Took over Libya. Is looking at Tunisia. There's not much there, so they don't care. And they are starting to go into Ivory Coast. France is bailing out of everywhere. So Morocco had to do a deal with the United States, Israel, and Spain. And they're kind of, you know, what's holding Russia from taking over the rest of Africa. They can't touch Egypt because Egypt is with the United States, so that's easy. But the rest of the world, and I swear that's what we say, jurisdiction, the rest of the world is going to shit. I mean, it's really going, I mean, it's tough. So Algeria is trying to put pressure on Morocco, but it's not Algeria, it's Russia. And we see it. And the same in Burkina, it's the same in Niger, it's the same in Mali. And you know, look at Sudan. What do you know, in 3 months we're going to hear that the second in command in Sudan that attacked the general was funded by someone. I mean, the guy is not by himself with all these bombs. So he's funded by somebody, and they've created instability in Ethiopia, and Eritrea forever, Ethiopia, now Sudan, and it's a war. It's a positioning, and so France has decided to protect Niger because of uranium. They are slowly getting out of Ivory Coast, they got out of Burkina, got out of Mali, they got out of Algeria. So it's very interesting what's going on, and that's why jurisdiction is so important. So yes, Morocco is safe, because Morocco is fully backed by the United States. There's, you know, they're building an army camp. It's backed by Spain. It's backed by Israel. There's 2 flights a day from Tel Aviv. There's 2 flights a day from Canada. So Morocco will be and will continue to be, you know, the fort for that. But if you told me, come to Algeria, we're going to do a project, I say no. Libya, no. Chad, no. Of course, Burkina, we're out of it, and it's extremely difficult. So what's happening right now is what you're seeing in Ukraine, you're seeing the same but it doesn't get as much publicity. It's the same thing of positioning and who's going to control the resources and who will control the world. So, but Morocco's good, to answer your question.
Fantastic. Now we're out of time.
Yeah.
Benoit, thank you so much for joining us. It was fantastic. And to stick around, because I also have a few questions for you as well. Thank you so much. Fantastic. That was wonderful. And now, last session before our lunch break is John Miniotis of Abra Silver Resources. Explorer down in Argentina. So we're flying 15 hours to the west now, and they're also drilling a copper hole, which I'm really curious to hear more about. Maybe you brought some visuals? Did you bring some visuals? Because I know the essays are not out yet.
On La Cuepita,
fantastic.
Sure.
No, looking forward to that. And John, thank you so much for joining us, and stage is yours.
My pleasure.
Thank you.
Good afternoon, everyone. Thank you very much for being here. A special thank you, of course, to Willem, the entire Commodity Discovery team, for putting this excellent event together. I know there's lots of great companies presenting here, so it's really an honor for Abra Silver to be recognized. It's a testament to our exploration team, the success they've had at site over the last couple of years. So I'm really looking forward to walking you through our story. Of course, there's going to be some forward-looking statements as part of the presentation here. So Abra Silver is an advanced stage silver and gold exploration company. Our key project is called Diablilos. It's located in the Salta province of Argentina, which is a very mining-friendly province in Argentina. The Diablilos project is about 80 square kilometers, and most of the drilling up until recently has been focused on one key deposit that we call the Oculto deposit. And so at Oculto, we were drilling there for the past few years, had some very successful results, and managed to grow the Oculto deposit quite significantly. We just updated our resource estimate there back in November, and we're now sitting at over 50 million tons. Very good grades. This is open pittable, close to surface, and that's entirely in the measured and indicated category. So at Oculto alone, we're sitting with a resource of about 110 million ounces of silver, 1.3 million ounces of gold close to surface. Now, as we look forward, what's really exciting, and I believe the reason why we're here, is just a few hundred meters to the southwest of Oculto, we have a brand new discovery. Now, this is called the Jack deposit. We announced the first hole there back in August of last year, so quite recently. And since then, we've now announced dozens of very high-grade results. This is a primary silver discovery here, which we'll talk about momentarily. But this is where our drilling is focused right now. We've announced some incredible high-grade results already from this Jack zone, with a lot more in the pipeline to be announced in the very near future. Importantly, we also have a very strong balance sheet. So currently, we have about $15 million in the bank. So that's sufficient to carry our exploration program for the next 12 months and beyond. So fully funded for the foreseeable future to continue to drill here. We also have some very supportive shareholders. Of course, Commodity Discovery Fund was there from the onset, so they recognize the potential here very early on. So kudos to them. And then we also have Eric Sprott as our largest shareholder. He owns 12% of the company. As Kai was mentioning, in addition to Diablilos, in the San Juan province of Argentina, we also have an earlier stage project. This is a large copper porphyry that we're drilling. We actually just completed drilling a 1.3 kilometer deep hole testing this big copper porphyry system, and we should have results from that out within the next 2 months. And I'll talk about that momentarily as well. So potential for a large copper discovery in addition to what we already have going on at Diablilos. So just quickly looking at the macro backdrop, as we all know, I mean, the commodity space is very, very cyclical, and so timing is key. Timing is very important. We think right now this is absolutely ideal timing for both gold and silver. From a macroeconomic perspective, there's lots of uncertainty out there, as we know, with rising geopolitical tensions globally. You have bank failures, historic moves recently in the yield curves. All of these bode very well, of course, for gold, which is a safe haven with a proven track record there, and especially for silver. Silver, of course, is also a monetary metal, just like gold is, but also has significant industrial applications. And I believe the Silver Institute just recently came out with, or just last week, in fact, came out with their latest update, and silver had over a 240 million ounce deficit in last year. So one of the largest deficits in recent times. And so clearly, demand for silver is increasing. Supply has been stagnant for years. And so that's why we feel very, very fortunate to have this high-quality primary silver project that we're advancing towards production. Now, looking at, of course, there's various ways, again, to play gold and silver. If you look historically, the best performing sort of vehicle has always been if you find junior explorers with discoveries. And so back in 2020 is when myself and our team took over the company. So we were running another company called Aethon Minerals. We merged the two together and started running this company. This was in January 2020. We had a 5-cent share price, about a $10 million market cap. Our chief geologist, Dave O'Connor, who's in the front row here, he immediately recognized the potential of this asset, which is the reason why we merged. He started drilling, and right from the very first hole, had some incredible high-grade results. And this was, of course, at the main Oculto deposit. So at Oculto, he got some incredible results on a consistent basis. And you can see, as silver took off in 2020, Abra was actually the best performing silver explorer on the TSX Venture. So we're up over 750% that year. And again, a testament to the exploration success we had there. And just recently, again, as we've seen gold and silver hopefully bottom back in November, again, you can see with the ongoing success that we're having, not only at Oculto, but now at this new Jack discovery and also potential upside from our La Coipita project, you can see, again, the share price really starting to take off here, and we see a very bright future ahead for both gold and silver, and for Abra in particular. Now, where our key project is based, the Diablilos project, it's located right in the heart of the lithium triangle. So Salta is a very pro-mining, it's a very mining-friendly province in Argentina, northern Argentina. It's right in the middle of the lithium triangle. And for those of you following lithium, I mean, you know very well, it's a very, very active space with lots of new lithium projects being explored and actually advanced into construction. So you can see there, our Diablilos project, within a 100-kilometer radius all around us, there's 4 lithium projects that are currently being built. So that's over $2 billion US of CapEx that's going on in the ground right now, right around our project. So of course that has tremendous benefits for us. There's a new solar plant that's being built to the north there. There's already a natural gas pipeline in place. There's discussions of a second one being built there to supply power for all these mining projects. You know, and it's already a paved highway for most of the way from Salta, with, you know, lots of infrastructure benefits as well. And so Salta is a proven mining jurisdiction. It's clearly attracting a lot of foreign capital, building projects, and we feel very confident in saying Diablilos will be the next project to enter that construction decision in the near future. Now, putting our key Oculto deposit sort of in perspective is quite hard. I mean, you say 50 million tons, but it's very hard to visualize that. I think this graphic here sort of does a good job. For those of you who have been to Toronto, you know the CN Tower, of course, is over 420 meters high. That's sort of the dimension. So if you picture that, and then you picture the Oculto mineralized system, it's sort of similar in height. So this is close to surface. The open pit, the proposed pit, will go down to about 300 meters from surface. And so this is a large, bulk mineable deposit. Again, I mean, we've grown this substantially in recent years, and it now grades, you know, over 50 million tons in the measured and indicated category with very good open pitable grades in oxides. And just looking at the track record here, so again, when we took over in 2020, there was already a historic estimate that was calculated back in 2018. That was about 26 million tons here. So we had 80 million ounces of silver, 730,000 ounces of gold. You can see the success that our exploration team had in a very short period of time with quite a modest exploration budget as well. So in 2 years, we completed our phase 1 program. That was the 2021 pit that you saw there. And then we completed the subsequent year, phase 2 drill program. In addition, both exploration phases cost us less than $10 million US, and we were able to add over 75 million ounces of silver equivalent in the ground. So a very, very cost-effective program here. We've always had 2 drill rigs at site. That continues to be the case today. And essentially, for every 12 cents that we fund our exploration team, they come back with an ounce of silver in the ground. So remarkable sort of low-cost exploration here with excellent track record of unlocking value. Now, if you look at the silver intercepts here on a global basis, so this is similar. Aya presented this. Theirs was only looking at silver. Our Oculto deposit is actually essentially 50-50 mix between silver and gold. So Oculto is 100% precious metals, but it's a 50-50 mix of silver and gold. So when you convert the gold into silver equivalent and you rank the sort of silver equivalent intercepts throughout the industry over the last 2.5 years now, you can see on a grade thickness basis, out of the 11 best results in the world, Oculto had 6 of those. And so more than half of the best silver intercepts, silver equivalent intercepts in the world have come from Oculto. And you can see on a regular basis, hitting well over 100-meter thicknesses here from surface at very, very good grades. So Oculto has really grown. We've added a lot of value. But again, what's really exciting us as we look forward is this new Jack discovery. So you can see Jack, let me see if I can get the pointer here. So just to the southwest of Oculto, we have this brand new zone. The way this was discovered is we ran some geophysics across our entire property, and we saw this big magnetic low anomaly, which we didn't really understand why it was there. This is in an area, importantly, that had 0 drilling done historically. And so at Oculto, over many years, there's been over 120,000 meters of drilling taking place. Not a single hole was drilled to the south here. And so we drilled one single hole, announced that back in August, and you can see the results. So almost 90 meters of 350 grams of silver. And so Jack, unlike Oculto, is like 95% silver rich here with just a little bit of gold. And so this is a high-grade primary silver discovery, close to surface, in oxides, with incredible grades. So immediately after that one hole was drilled, we drilled 4 holes, 50 meters on either direction from that discovery hole. All 4 of those holes came back with excellent drill results. And so we were drilling at Oculto. We moved both rigs immediately away from Oculto, saying, look, Jack here is looking pretty remarkable. And we've been drilling here ever since. So both rigs have been drilling here since sort of late last year. We've drilled over 80 holes to date. We've received back results from 40 of those, with the other 40 still in the lab waiting to be announced. Remarkably, out of the 40 holes we've announced to date, all 40, every single one, hit silver mineralization. And this is in an area, again, that had 0 historical drilling. And so we've been drilling here sort of on 25 to 50 meter centers along strike. We've now extended this for over 800 meters along strike, and it's still open. I mean, we still haven't missed based on the holes we've announced to date. And so we announced an upsize to our drill program a few months ago. Our original expectation was to drill 15,000 meters here, define a resource. Of course, as Jack remained open, we expanded that. So we're drilling now 22,000 meters. That's essentially about 80% complete at the moment. Will be completed really by the end of next month. And then in September, we'll be announcing a resource estimate on this new Jack zone with a pre-feasibility study on the entire Diablos project by the end of this year. So Jack is really a game changer for us. Importantly as well, as you look at the topography here, when you go out towards the northeast, you can see mineralization starts getting a bit deeper. And so Oculto has a strip ratio of about 3 to 1 or 3.5 to 1. At Jack, this is all flat lying. So this is right in the valley, and mineralization is 50 meters below surface. So this is located flat zone, low strip ratio, very high silver grades, will result in better silver recoveries we expect. So a lot of benefits here. And so Jack, again, is truly going to change the economics as we look forward. I mentioned we've announced 40 holes to date. I couldn't fit them all on one slide. But yeah, we've had some remarkable successes. So dozens of very high-grade holes you can see here. These are the grades, hundreds of grams on a very consistent basis here. In fact, in some cases, up to 3 kilos over very, very good thicknesses. And I guess, again, it's hard to sort of put these grades into perspective, But when you look at Oculto, the cutoff grade there, because it's open pitable, close to surface in oxides, is 35 grams of silver. So 35 grams for silver, and above is economic mineralization. At Oculto, the average grade is about 120 grams silver equivalent. We have a high grade zone, which grades over 200 grams silver equivalent. But looking at the grades here, I mean, this is higher grade than the highest grade zone at Oculto so far on a very consistent basis. And so when you have cutoff grades of 35 grams and you're intersecting, consistent grades, sort of 10 times that plus, this is truly quite a remarkable discovery here with a lot of upside potential ahead of us. Again, trying to visualize sort of how big the Jack zone is. It's open along strike, and so far we've extended this for already 800 meters along strike. So again, putting that CN Tower into perspective, if you look at the Sky Dome, we're now called the Rogers Centre in Toronto. It's a baseball stadium. Right now, Jack is open for 4 baseball stadiums and still growing. And so this is a large-scale, high-grade discovery. And I think that's what you look for typically in the investment space. It's a very unique combination. It's quite often you get a small high-grade deposit. Getting a large high-grade deposit is clearly much more beneficial, and that's what we think we have here at Jack, and still growing. Now switching gears, just talking quickly about our La Cuepita project. This is a copper porphyry in the San Juan province of Argentina. And so this is another very mining-friendly province in Argentina. I'd say in Argentina, Salta and San Juan are both seen as being sort of the premier mining jurisdictions. To the north of us, there's lots of copper exploration going on with Filo del Sol to the north, Lundin Mining acquiring Jose Maria, that mine that will become a mine shortly as they're building that. And then to the south, Los Azules, of course, Rio Tinto has now invested in that. That's to the south of us. And so there's a number of billion-ton porphyries all along this belt. Back in 2020, we were able to consolidate a huge land package. So we consolidated 70,000 hectares right in the heart of this copper porphyry belt here, and had very little exploration done historically. And so we consolidated this on a very cheap basis with an option agreement with 2 private individuals. Last year, we drilled the first 2 deep holes on this property. The second hole hit over 700 meters of mineralization with, over, I guess it was 220 meters of just over 0.4% copper equivalent. So good grades. I mean, on average along this belt, 0.4 to 0.5% copper equivalent seems to be the grade there of some of these mega porphyries. So we were very encouraged by that second hole last year. And this year, we just completed drilling a 1.3 kilometer deep hole into what we believe could be the center of the system. And so this is a large porphyry target here. Diameter is about 1 kilometer across. And so very early stage, obviously higher risk here. But we could be drilling what we believe to be the next sort of major copper porphyry in this advanced belt. So very, very excited about this. Results should be announced, should be received by us in about 2 months' time. And of course, will be announced immediately once we receive those. So that's really it. I think that's it in a nutshell. We have a very, very busy year ahead. Diablilos, of course, is where we're focused. We've now expanded that drill program at Jack. We've been announcing drill results every 3 weeks on average, and we expect that to continue to be the case. So a lot of news flow ahead of us here, announcements from the Jack zone as we get back these results from the lab and as we continue to drill. And then by September, we'll have a resource estimate on Jack, and then a pre-feasibility study by year end. And then there's also a number of other new targets as well on Diablilos. So as we ran that geophysics, we saw that mag low at Jack in an area that had previously had no drilling. We've also identified some other targets. So we'll be drilling those targets, and hopefully we can continue to grow the Diablilos project here, going from just 1 main deposit a year ago to now 2, and hopefully we can find a few others in this location as well. So very exciting time for the company. Thank you very much for everyone's attention, and happy to take any questions.
Fantastic, John. Wonderful presentation. Thank you so much.
Thank you very much.
And before we, pause for lunch here, do we have any questions for John and Abra Silver? Perfect. I have a couple.
Perfect.
How far along the drill program are you right now? You said 22,000 meters is underway. Where are you at right now?
We've drilled about 20,000 of those. And so by the end of May, we'll complete that drill program. Yeah. And that's why by September already, we expect to have a resource on this new jack zone.
Fantastic. Yeah, that's fairly quick. Quick turnaround. I'm sure you're blogging and logging and all at the same time, so you know where to put the drills. Are you planning your drilling based on those results, or do you have that pre-planned already?
Yeah. So we're planning the next set of holes as we receive the results from the latest batch. And so right now we've been drilling along strike. It's also open along the width as well. And so we've drilled a couple holes to the south, a couple holes to the north, waiting to receive those. And then if those hit mineralization, then we'll continue to delineate sort of the next set of holes.
Fantastic. I don't have to ask you about what the next stage is after the resource. I'm sure you're going to keep drilling, and then I saw PFS.
PFS this year, and then, of course, a bankable feasibility study we expect by the end of 2024.
Fantastic. Yeah, that's a rapid development path. Fantastic. John, thank you so much for joining us. We'll break for lunch, and we'll reconvene here at 1 o'clock, and we'll continue with another keynote by Warren Gilman. Really looking forward to that. So see you all back here at 1 o'clock.
Excellent.
Fantastic.
Thanks.
Thank you so much, John. Welcome back, everybody, to part 2 of the Commodity Discovery Fund Day. Thank you so much again for joining us this afternoon. Part 2 coming up right now. We got Warren Gilman joining us for a fantastic keynote on how he's investing in the junior mining or in the mining space in general. It's a bit of a different model. While Commodity Discovery Fund focuses more on equity, Queen's Road looks more at bonds and convertible structures. Bit different approach, and Warren Gilman is an industry veteran. He's had over 30 years in the sector, especially in mining as well, and really looking forward to his presentation because I interviewed him about 2 years ago on our YouTube channel, Soar Financially, and it's still one of my favorite interviews I've done, and I'm not saying that lightly. I've done a lot of interviews, but I really enjoyed it with him, so I'm pretty sure you will enjoy his presentation because if it flows just like the conversation we had, it should be fantastic. I think I've said enough. We've got 3 company presentations coming up. We got the award right after, so stick around for that. And of course, to close it all up, we have Willem's keynote as well, followed by the fund AGM. So make sure to stick around for that. And thank you so much again for joining us. And Warren, please join us on stage. Fantastic.
Thank you, Kat.
Have a great one.
Well, ladies and gentlemen, thank you very much for the opportunity to present Queen's Road Capital to you this afternoon. Obviously, I have to thank Willem and the Commodity Discovery Fund team for the invitation and the platform from which to address you this afternoon. What Willem and his team do is a tremendous service. You heard this morning about the requirement for commodities going ahead and how demand is going to be explosive in the coming decade. Notwithstanding that, investing in the mining sector is incredibly risky. And I'm sure every single person in this room has experienced, as they used to say on TV, the agony of defeat. We've all experienced the joy of victory when we make a great stock selection, but we've all experienced the agony of defeat when we make a poor one or an ill-timed one and we lose money. And Willem's team takes a great deal of experience and a great deal of diligence and tries to do all that work on your behalf. So I think it's a service that is going to stand everyone in this room in good stead. And I'm honored that he's allowed me to address you because we do a similar sort of thing at Queen's Road. Queen's Road is a mining investor. That is what we do. We eat, live, breathe this business, as I've done ever since I was a little kid. As Willem said, he and his team read press releases 24/7 looking for the next big thing. And that's exactly what I do and what I've done most of my life. But a difference between us and the Commodity Diversified Fund, Discovery Fund, is that you can buy our company. Queen's Road is a public company. We're Toronto listed. You can buy a share of Queen's Road, and you can entrust your capital to us, and we'll do our best to find the next great thing for you. But we do it in a different way. As Kai was saying, we don't focus on equity. You know why? Because you can lose money when you buy equity. Stocks go down. We focus on convertible debentures. Convertible debentures do 3 things, which are very important. And I'll give you a little bit of a story as to why we focus on convertible debentures. But the 3 important things are, you don't lose money. Very important. Secondly, you get a dividend. Companies pay me a dividend every quarter. That cash continually comes in. And at the end of the year, what do I do with that cash? I distribute it to my shareholders. So we pay a dividend every year to our shareholders. So we invest in a debt security, so we won't lose your money. We pay you a dividend at the end of each year, and we give you unlimited upside exposure to the great ore bodies that we invest in. That's a great formula for people in this room who want to get exposure to to the commodities business, but don't want to lose money. It's very, very, very important. We shouldn't be gambling. We shouldn't be rolling the dice. We shouldn't be investing in companies because we're expecting the gold price to go up, or we're hoping the silver price will go up. That's not a strategy. That's gambling. You don't want to invest in a company, at least I don't, where we're putting a drill hole down. If it hits, great. That's wonderful. But if it misses, I'm going to lose my money. And as one of the slides earlier this morning showed, what is it? 1 out of 5,000, 1 out of 1,000, 1 out of 10,000. All I know is it's a bit of a lottery ticket. The odds are against you. The odds of that hole hitting are quite low. Why would anyone in this room take on that exposure? Why not have your exposure through a convertible debenture where if the hole doesn't hit, it really doesn't matter because your investment is protected. That's our structure. That's what we do. We do it all day long. But let me give you a little bit of history as to how we got there and how this came about. I'm a mining engineer. I'm not a geologist. Maybe that's part of the bias about not trusting the drill bit. I'm much more interested in the economics. My father was an exploration geologist. I lived my life since, as I say, I used to go with him out to drill camps and start splitting core when I was 8, 9 years old. He worked his entire life in northern Canada looking for the next great thing. His entire life. He never found it. So I'm very concerned about protecting people's downside and earning them a return. So I'm a mining engineer. I got, as part of our discussion was earlier this morning, got tired of getting laid off by different mining companies over the course of my career. Decided to get some stability, so I got a business degree, joined a Canadian bank. Wound up being a pretty good decision because I didn't get laid off for 26 years, so I had a steady job. So I was a mining banker for 26 years. Again, all about eating, living, and breathing this industry. Moved to Australia, ran our mining business in Australia. Lived through Australia in the 97 to 2000 period. Someone earlier referenced gold went to $200 an ounce. It was the end of the mining industry. You might recall the term Rust Belt industry. It was a Rust Belt industry. We'd never need mining again. It was all about the internet. It was all about telephones and mobility and all of that sort of thing. So fortunately, I had the opportunity to move up to Hong Kong. And as the bank said, Warren, you'll never ever do another mining deal for the rest of your life. That's over. Look after this fellow by the name of Li Ka-shing. I don't know if anyone in this room is familiar with Mr. Li. Li Ka-shing has, for decades, been Hong Kong's richest man. And that's saying something, because there's a lot of rich guys in Hong Kong. And he's, for decades, been the richest guy in Hong Kong. While I was in Hong Kong, I got to know Mr. Li and eventually convinced him to invest in the mining business. And in 2010, after 26 years, I left the bank and worked for Mr. Li, spending his money, effectively. It was a dream job for a kid from Northern Ontario who became a mining engineer. He winds up moving to Hong Kong and getting the kid in the cookie jar, hand in the cookie jar type of thing, or a kid in the candy shop. I basically had Mr. Li's money, and I could go buy things. So we did that for 10 years, and that was a tough 10-year period, 2010 to 2019. There were a lot of down years in that time, and during that period, every single investment we made money, and in some cases made a lot of money. But the business strategy of Queen's Road was born through that 10-year period. When I first started work for Mr. Li in 2010, he said, okay, Warren, 3 rules. Rule number one, don't lose my money. And rule number one, I saw it in action. Mr. Lee was a great fellow. He's a brilliant man. To this day, he's a brilliant man. He's 95 years old now and still basically runs a almost $1 trillion empire, very diversified around the world. But if you, in any given year, lost Mr. Lee's money, your relationship with him was over. And I saw guys that worked for him for 20, 30 years as CEOs of some of his subsidiary companies. And if they had a bad year, they were called into the office. That was the end of it. So, number one, don't lose Mr. Lee's money. That rule is sacrosanct. Number two, you don't get my money for free. Every year, Warren, you're going to come up here just before Christmas. We're going to sit at this sofa. Nice lady's going to come in, give us some Chinese tea. And after 10 minutes of nice, friendly conversation, because that's all you get 10 minutes, you're going to stand up and you're going to leave. But you're going to leave a check on the table. And you're going to leave that check on the table every year. And I don't want to hear that the price of gold dropped. I don't want to hear that the mine that we invested in had a bad year, or someone got hurt, or the weather was bad, or there was a power failure, or some mechanical failure at the mine. I don't care. You got to write me a check every single year. It's a bit like working for the mob. That's your problem. It's not my problem. You got to pay me. So I had to pay Mr. Lee a dividend at the end of every year. And number three, oh yeah, Warren, you're the guy that convinced me to invest in the mining business. So I want unlimited exposure, unlimited upside exposure to the mining business. So don't lose my money, leave me a check at the end of every year, and give me unlimited exposure to the upside. Off you go. Okay, what a job. How did we manage to do that? Well, through experience, we developed this methodology of investing, which, as I explained right at the beginning of my discussion, we invest in convertible debentures. Protect your downside, pay you a dividend every year, and have unlimited upside exposure to this great surge in demand in commodities that we're going to see for the next 10 years. That's the company that we started 3 years ago. Named it after Queen's Road. Queen's Road is the Wall Street of Hong Kong, or the Bay Street of Hong Kong, however you want to describe that. So no, we're not going to change the name to the King's Road because the street is called Queen's Road. So Queen's Road Capital. We're listed in Toronto. QRC is our symbol, very easy to remember. And all I can do is promise you that we, shall I say it again, won't lose your money. We'll pay you a dividend the end of the year, and we'll give you unlimited exposure to the world's great ore bodies. What do I mean by the world's great ore bodies? Well, just as Willem and his team are commodity agnostic, we're commodity agnostic. We don't care whether it's uranium or copper or gold. We really don't. All I want to do is invest in the best ore bodies in any particular commodity in the world, so that it's not a question of making money. It's just a question of how much money we're going to make. As we say, we all think that commodity prices are going to go up, but the fact of the matter is they generally do this. There is always the potential to get your timing wrong, and even if you pick the right commodity, if your timing is wrong, you're not going to make a heck of a lot of money. So you want to invest in ore bodies that are going to make money, whether the price of gold is up here or down here. It makes a lot more money if it's up here, But if it's down here, your downside is protected and you're still going to make money. So right now, our portfolio is heavily biased towards uranium. About 50% of our NAV is uranium. That's by virtue of success. The first two investments we made very quickly went up by multiples. And so our portfolio became almost a pseudonym for uranium. Over time, that has been diversified as we grew our portfolio of convertible debentures. So now it's about 50%. So our portfolio is about 50% uranium, about 30% gold, and about 25% copper. That almost adds up to 100%. But we're growing very, very quickly. We started off in our first year with nothing. We raised $85 million, and I'll come back to who we raised that money from. We invested in a variety of things. We started off with a debenture portfolio of about $45 million. That was in year one. Year two, we doubled that to about $95 million. So we ended our second year at a portfolio of $95 million. And we are now in our third year. I would expect that by the end of the third year, our portfolio will be somewhere in the range of 150 to 170 million US in convertible debentures. So our portfolio is growing relatively fast-paced. At the end of our first year of operation, we paid a dividend to our shareholders. How many startup companies do you know paid a dividend to their shareholders at the end of their first year of operation? That's the nature of our structure. These coupons come in from our portfolio of convertible debentures. We pay the operating costs of the company, which are extremely low. Operating costs consist of one office in Hong Kong that's 1,000 square feet and 3 employees. That's it. Costs us less than $2 million a year, including audit fees, exchange fees, accounting fees. That's it. $2 million. So you can imagine, once you get to a portfolio where we are today of about $100 million US dollars that's paying us about 9 to 10% in coupons a year, that's $10 million a year that comes in the door. $2 million of that goes to pay the operating expenses, the rest, $8 million, paid out to shareholders. If we increase that portfolio from 100 to, say, 200 million, at about 10%, that's $20 million coming in. Still with an operating base that isn't going to change. It's still going to be $2 million. That'll be $18 million in dividends that will go out to the shareholders. That's our model. That's how we work. That's my commitment to our shareholders, is that this is how we're going to operate in the future. So at the end of our first year, we paid a dividend. At the end of our second year, we paid a bigger dividend. So last year, our dividend increased about 14% from our first year. And guess what? At the end of this year, we're going to pay another dividend, and it's going to be bigger than last year's dividend. Beyond dividends, what you're really interested in is upside exposure. And someone asked me yesterday, I thought it was a really good question. What is the main selling feature of Queen's Road? And it's a difficult question to answer because it depends on who the audience is. When I go and make this presentation down in Australia, no one cares about the dividend. No one cares about the debentures. Australia is full of, as we refer to them, punters. These are guys who love to roll the dice. These are guys who don't mind if they lose their entire investment. They want the unlimited upside. So when I make this presentation to Australians, All they care about is the unlimited upside exposure. So they want to hear specifically about the companies you're investing in and how those companies are going to go to the moon. I started just this year making presentations here in Europe, and I found that the audience here in Europe is very different. This is the first time that I've done this in the Netherlands, so I'm looking forward to the feedback to see what this audience thinks is the most important selling feature. But certainly when I was in Zurich and in Germany and in Paris, what everyone wanted to hear about was your dividend strategy. How can I get my downside protected and get my dividend? The explosive upside, that'll take care of itself. But tell me how you're not going to lose my money. So it'll be interesting to see how this audience decides to assess the Queen's Road business plan. But beyond those aspects, what do we invest in? Great ore bodies, and this is where there's an element, just as you trust Willem and the Commodity Discovery Fund, there's an element of trust in saying, you know what, Warren, you've grown up in this business, you eat and breathe it, you're a mining engineer, you're a career-long banker, now you've been an investor of billionaires' money for a decade. You know what? Trust me to find the great ore bodies. I'm the guy who does all the due diligence. I'm the guy who goes to the site. I'm the guy who decides what companies fit our model and which ones do not. I mentioned earlier that we did our first capital raising a couple of years ago. We raised 85 million. That was all bought by Australian billionaires. 90% of our shares are held by 7 or 8 Australian billionaires. So we have a relatively small float, frankly. There's only about 10% of our shares that actually trade, because the others are held by these fellows who have entrusted me to go off and make money for them. So amongst those shareholders is Andrew Forrest, who you may or may not know he's Australia's richest man and one of the iron ore magnates of Australia. Jack Cowan, who's the fast food king of Australia. John Singleton, who's the advertising king of Australia. Brett Blundy, who's the retail king of Australia. These are all self-made Australian billionaires who know the value of a dollar and who have entrusted their capital with me. We did a second raising last year where we raised another $100 million. Every single one of those billionaires wrote the same check all over again. In some cases, a little bit more money than they put in the last time. Only the share price was more than double what we had done the previous round at 2 years earlier. So they've all done very well. And one other aspect of a dividend that I should mention, when I paid my first dividend, I called up Andrew Forrest and Jack Cowan and I said, gentlemen, as I committed to you, I'm going to send you a check shortly. And they, to a man, said, Warren, no, you're not. Don't send us the check. And I said, well, no, at the end of each year, we're going to pay you a dividend. He said, we don't need money. We don't need cash. Just give us more shares. So we instituted what we call a DRIP, a dividend reinvestment plan, where you have a choice between accepting cash as a dividend or getting more shares as a dividend. Last year, 90% of our shareholders, 90% of our shareholders decided to accept paper instead of cash. So I declared an $8 million dividend. I only actually paid out $800,000 in cash because everyone else took shares. So it's a tremendous vote of confidence in the value of those shares and the upside that those shareholders see in Queen's Road. So hopefully, after hearing my presentation, everyone here came here with the same purpose, I believe. Everyone here has an objective of investing into the resource sector. You all have that goal. You all want to make money. None of you want to lose money in the process. You want to invest, get that upside exposure, but you want to sleep at night knowing that your money is safe. Well, I'm here to help you. I'm here to help you sleep at night. And so if you put money into Queen's Road Capital, that's precisely what we'll do. You'll be able to sleep at night, you'll get a dividend at the end of the year, and you'll get that exposure to the commodity business that will hopefully serve you and your children and your children's children well in the coming 20 years. Willem, thank you for the opportunity. Ladies and gentlemen, thank you for your time.
Wonderful. Warren, thank you so much. Great presentation. Stick with us for a couple minutes because we do have time for questions.
Okay.
And also, I just learned that Commodity Discovery Fund is also an investor in Queen's Road Capital. They own shares.
They do indeed.
So
they do indeed.
Part of a more of a defensive strategy there as well, covering the equity side with a bit of debt, I guess, debt investments. Do we have any questions for Warren?
Yes, I have one question here.
Oh.
Maybe it's a question I am not allowed to ask.
Sure.
Because if I look around, there is a certain age in the hall here. Sorry for my English, it's not so good. You were educated by, I forgot his name. He was leading you in the, what was his name? The man, Mr. Lee.
Lee Ka-shing, yes.
Yeah, this was your teacher, or how do you say that?
Mentor.
Your financial mentor.
Yes.
And I wonder, how old is the next one after you? Is your company only the age here? Or are there younger people who learn from you how to manage the fund or your company? Sorry for my question.
Are you dancing around the topic of key man risk? Is that the question?
My English is not that good, but what's key man risk?
So, key man risk is an interesting topic because I've had institutional investors, I've made presentations to institutional investors, and they've come back to me, Warren, I know you're going to do well, we know you know the industry really, really well, but we can't invest in you because there's too much key man risk. What happens, Warren, if you get run over by a bus, hit by a bus? And I respond to that two ways. Well, first of all, the irony isn't lost on me because the whole reason my billionaire friends in Australia invested in Queen's Road Capital was because of the key man. So I get institutional investors who are not investing in Queen's Road because of the key man. So the irony is a little bit interesting. But my wife asked me the same question. I get on the plane, I'm running off, and literally just before I went down to Australia a couple of weeks ago, she said, Warren, what happens if you never come back? What happens if you have a heart attack on the plane or something? What happens to us and the kids? I said, well, net asset value of Queen's Road right now is about 80 cents a share. We trade at 70 cents. So you can buy Queen's Road today at about a 10% discount to the underlying asset value of the company. So you get it for less than the assets that are in it. If I get hit by a bus tomorrow, all of a sudden you're 10% richer because we could liquidate the portfolio, give everyone all their money back, and everyone's 10% richer. Now, hopefully that won't happen, and the president of the company, Alex Granger, was my lifelong banker with me in Hong Kong, and he does all the site visits with me, and he does all the numbers, so he's barely 40 years old, and he can take over if that ever happens. But, Mr. Lee's 95 years old, and he's still running all of his companies. So I hope I'm going to be doing this for a few more decades.
There you go. Fantastic. I saw we had one more question over here.
How is it possible you can't lose money? Are you buying put options or something? What is the strategy?
We're debt holders. We're debt holders, and in each company, except for one, and I'll go to the exception, we're the only debt holder in the company. So NextGen, for example, NextGen is one of the great discoveries of this century. Huge uranium deposit in Saskatchewan. Market cap of $3 billion on an exploration property. That's how important this thing is. We have a convertible debenture in NextGen. We're the only person on planet Earth that holds a debenture, a $15 million debenture in NextGen on a $3 billion company. They can't take on any other debt. They can't do any other convertible debentures. They can't do anything without our say-so. We're the only debt holder. So our $15 million US convertible debenture, which now is worth about $60 million because the stock has quadrupled since we made the investment, and we get that upside exposure. Our $15 million investment is effectively secured by a $3 billion asset base. So I think our downside's pretty safe. The only difference is our third investment was in a company called Adriatic Metals. And Adriatic is about 6 months away from coming into production at a polymetallic silver mine in Bosnia. They took on $150 million of debt from Orion Mine Finance to build the mine. That money is being used as we speak to build the mine. I agreed in that instance. Up until that point, again, I was the only debt holder in that company. They could not take on that debt without my approval. I agreed to go subordinate to Orion for a fee. So now they pay me more money than they used to because I'm subordinate. But other than Adriatic, we're the top guy in the capital structure of every single company we've invested in.
Fantastic. Warren, we're out of time. Really, really appreciate great presentation.
Thank you, Guy.
And you'll be around. I think there's a meet and greet afterwards as well. So thank you so much, Warren. Oh. Oh, hold on. There we go. Just waiting for the slide to pop up. There we go. You've seen it already? Stop. There we go. And I'm going to introduce Martin Holland in a few short seconds, but you've seen there's a video coming right after. But Cobra is one of the award-nominated companies, obviously, but it's also the smallest one, I think, with $32 million in market cap, but really interesting portfolio of copper assets in Botswana and Western Australia. Really looking forward to this presentation. I'll bring Martin on stage in just 60 seconds.
Well, thank you, ladies and gentlemen, for your time here. Firstly, I'd like to say thanks to Willem and also Commodity Discovery Fund for having me here. What you just witnessed there is Cobra's vision, and I don't think it's only Cobra's vision, but it's a vision for a lot of exploration companies out there. And I think what a lot of investors should actually take note on is that without exploration, there's no new discoveries. And without new discoveries, there's no path at all to net zero 2050. So when you make an investment into an exploration company, you should actually consider it as as that being an overall ethical investment, as well as a way to actually get a return out of your money. So today we're going over to Botswana, which is known as the Kalahari Copper Belt. I'll flick through the disclaimer here, and I'll go straight into the corporate snapshot. So this company, out of all the talks that's here at this event, is the lowest market capitalisation at present. So it's around about 31 million Australian dollars. We have circa around about 280 odd million shares on issue. We have a cash position at present of around $9 million. And we have a larger shareholder being Metal Tiger with around 20%, and Commodity Discovery with around about 8% as our second largest shareholder. I personally am around the third or fourth largest shareholder with around 4% of the company. Actually, I'll just go back to that slide. Since we're here talking about discoveries, you can see this chart here, which shows the share price performance. And we did have quite a significant copper discovery in Botswana. As soon as that happened, the share price went from around 10 cents to circa around 70 cents a share. In one day in particular, the volume kicked in with around about $42 million traded in one day. So there's been quite a large amount of volume traded in the stock over the period. It's fallen off at present, though we are still doing a huge amount of exploration, and there's quite a significant amount of results due pending at present. And the company itself has around about 2,000 shareholders to date. So the company itself, I'm the executive chairman of the company. I've been involved in a whole range of exploration companies over the last sort of 15 years. I've got a banking sort of corporate finance, a capital markets experience. Though over those 15 years, I've learned enough about geology to be dangerous at that level, even though I'm not a geologist. We also have Adam Woolridge, who is the CEO of the company. He is a geologist and also a geophysicist. He worked for BHP back in the day on this project, on this area. We've also got a Dr. Ross McGowan, who is based in South Africa. He's an important for the board and also from a technical perspective. Talking about team and large discoveries, he got the Lindsay Award for the discovery of Kamoa, which was the largest sort of copper discovery, highest grade discovery, which was found by Ivanhoe. And he's a great credit to have on our team, which shows like the scale potential that we've got here in Botswana. As we move forward here, we are a copper-focused explorer. So it's all about the new age metal, the battery metal. And if you look around all different deposits in the world, like the grade of copper is actually depleting in grade. So the average global grade at present is about 0.6% copper. And across the board, the overall mine life is also decreasing as well. We are in a position now that we've got our main asset being in Botswana, that we have also a project, which is a VMS project in copper in Australia, and we've got some exposure to a project in Gabon as well. But in this presentation, I'm going to focus purely on Botswana. So it's known as the Kalahari Copper Belt. So the Kalahari Copper Belt itself, this area is a huge, large area. You're talking around 6,000 square kilometres of land that we own in the Kalahari Copper Belt. Cobre, the company, which is a Spanish word for copper, owns 100% of this tenure. We've actually gone through this whole process to get to that, so that's quite a milestone for the company to be in this position now. And we are the second largest landholder in this belt, which is a new prospective belt for copper, outside of Sandfire Resources, which is a $3.5 billion market cap company in Australia, and the code of that is SFR. And there's a private company called Tribute Kenyon, which is now up for sale, and we're expecting some large M&A activity to happen in the belt over the next sort of half a year or so. Once that M&A activity happens, there will literally be Cobre being the second largest landholder of the belt. You'll have Sandfire, which is currently producing at present, and then you'll have the other company, Tribute Kenyon, owned by like another major company, which is also in production. So two production companies plus an exploration company. It's worth also noting that the US Geological Survey rated this belt as the most emerging and one of the most prospective areas to discover yet to be discovered sedimentary hosted copper deposits globally. So as I mentioned, our licenses are quite strategic. Our license is here in the green. Sandfire is in that orangey pinky colour, salmon colour, and Cribbit Canyon is in the light blue colour. It's worth noting here, I heard Equivest with her presentation earlier on in regards to where are you on the actual belt itself. It's worth noting that we're on the whole northern basin margin of the belt, which is the place you want to be, and also on the southern side of it as well. This is where all major new discoveries are actually found, on these basin margins. It's quite interesting from a scale perspective here. Like it's hard to comprehend, but we have 500 kilometres worth of strike. So you're talking like 500 kilometres, a whole new district of this contact that we own, which is owned 100% by the company. That's caused like a few issues as well in regards to where do you focus, and this is why we're here now, because we have actually focused in after years of exploration. It's turned into an overnight success with some recent drilling that we've done. So I'll touch on this here being the district scale opportunity that you see here. So once we're in this position, you're looking at two large areas that we're really targeting now, which we've broken down the 6,000 square kilometres to around 2,600 square kilometres. As I mentioned earlier, there's 500 kilometres worth of strike. Across the whole tenure, and this is why it's really important from a discovery perspective, is that we're exploring under 50 metres of sand cover. So it's extremely difficult to find these new discoveries once there's pretty much nothing at surface. So there's been a huge amount of analysis done, a lot of soil work, the latest geochemistry. We've also done a collaboration agreement with Sandfire Resources, that $3.5 billion company that I mentioned, in an aerial gradient gravity survey, which is going to be completed for the first time over the whole belt. And they're spending around $6.5 million US on this survey, and they're funding 50% of our costs, and we're sharing our data with them, and they're sharing their data with us. And I actually believe in these sort of large-scale belts, it's all about collaboration. So you need as many minds as possible working together to get a positive outcome that you're looking to achieve. So this is where it starts to get to talking about a bit of grade. I think what's important here to note is that these grades that you're seeing on the screen here is actually all in chalcocite mineralisation. So that might not mean a lot to most of the people here, but from a chalcocite mineralisation perspective, it's the highest grade copper you can get. So, and it's the highest grade from a recovery perspective, from an overall metallurgical perspective as well. So you have chalcocite being number one, and then you have bornite being number two, and then you have chalcopyrite being number three. So this is purely dominated by chalcocite mineralisation, which is going to be really favourable for us when we start doing some met work on this deposit that we're unlocking. It's worth noting here the scale. So you can see the name there saying Comet. That scale of that little circle there isn't so little. You're talking around 5 kilometres of strike length there. And we're actually doing exploration, not like other companies where you do small step outs. We actually started exploration here by doing 1 kilometre step outs. And every hole that we drill, which is diamond hole drilling, hit mineralisation. Then we stepped another kilometre out, we hit mineralisation. We stepped another kilometre out, we hit mineralisation. We stepped another kilometre out, we hit mineralisation. And this actually became quite fascinating from an exploration perspective. We then started tightening it in, and tightening in, it was still like a 500-metre step in between those, and we did a 250-metre step in between those. And we're now in the position that we're starting to understand the size potential of that area itself. But what's really intriguing by this shape here that you see all the way from the top there being Cosmos, down to Asteroid down the bottom, to the other side, Helios, up to Interstellar. If you look at that, it's almost like a banana shape. And that banana shape is around 80 kilometres worth of strike. And out of 47 holes that we've drilled there, which is all diamond hole drilling, we've actually hit 48 holes, has hit anomalous copper mineralisation throughout that whole zone area. So this is where it starts to get fascinating about how large is this actual deposit? Can this all join together? Will this be a globally significant deposit? What I can say right now is that we've hit some very interesting results. So we hit 9.3 metres at around 3.4% copper. And we've stepped out further and we've hit more mineralisation all the way along. And the lowest grade sort of copper that we're getting is sort of 0.4 to 0.5, but you're consistently getting that 1 to 1.5% hits as well throughout the belt. So comment here, I would say, would be the reason why Commodity Discovery invested to start off with. This was the discovery hole that we had. As I said, this was like a milestone for the company. You're talking, 50 meters of sand cover, trying to unlock a new copper discovery in an environment that there is very little, copper discoveries being found globally at all. So this was a 12.2 meter, as I mentioned, at 2.5% copper, and we've got a credit there as well of around 24 grams per tonne silver. We're expecting that to possibly average around 40 grams per tonne silver throughout the belt. At the intersection itself included a high-grade zone of around 1.7 metres at 11% copper. So you can tell here that the whole belt itself is extremely mineralised. So what we've done now is that's all those slides that I was showing you before is around 1,000 square kilometres, and we're now shifting slightly to the left, which is around 2,500 square kilometres. In this area, we've identified a new target, and the new target is called Klo. And this is a Afrikaans word, I guess, or a bushranger's word, and means elephant in Africa. And we actually see this as a very large target. You're talking around 6 kilometres long by sort of 6 kilometres wide. We've completed a whole range of soil sampling across this. So there's been thousands and thousands and thousands of samples. We're still actually collecting them at present. But interestingly, we've actually received those assays back, and this target itself has shown anomalous copper throughout the whole target. Why this is interesting for us from an exploration perspective is that we have an air core rig that just arrived on site today. We're expecting that to start. We're expecting to start exploration within the next day or so there, which will be around 10,000 metres of drilling that will occur from this week onwards. This here has the potential to unlock a whole new system in itself. You're talking an area that has no sand cover at all, so this is all outcropping Kwabe in this area. And it was quite fascinating, actually, that this area in itself, if you look back on the old reports, said it all had 50 metres of sand cover throughout the whole Kalahari. But when our team actually went out there and started walking, we could see there was no cover, it was very thin cover, and there was actually outcropping areas in that region. So we've got this new target that we're drilling now. And on the previous targets that I talked about, we've actually completed 5,000 metres of diamond drilling on those targets. That's happened since January of this year. That program is now finished, so we've done like an extensive amount of diamond drilling on that program, and we're expecting assays to come back in the middle of May. So that's going to be quite a milestone moment for the company on that project. So we have 5,000 metres of diamond drilling due assays, and we've just commenced now a 10,000 metre air core program, and in parallel with that we'll have that aerial gravity gradient survey coming out with the results of that in collaboration with Sandfire. So we're in a period now that we're going into a strong news flow period where we've been a bit quiet for the last sort of few months doing the work that we need to do on ground. So it's interesting that I had this slide in here, and again I did mention in regards to Equivest's talk, and they said that a lot of juniors don't have an exploration strategy. And I think this is very important that in here in this slide, this shows our strategy very clearly. Here you can see that we look at it from a district scale evaluation perspective, so we look at it all as a whole, and then we break it down and we say, okay, how do we do target generation? So then we go through that process. And you can see there that Klo target that I talked about, that elephant target, is in that target generation stage. We then move along from that, and then there's a target evaluation stage 1, which talks about Cosmos, Asteroid and Meta, all those other targets I mentioned. Then we move to stage 2 evaluation, which is that Helios and Interstellar, which those results are pending. And then we move to stage 3, which is Comet, which is almost getting to that resource definition process. So we work all the way along that. So we do the airborne geophysics to start off with, we do some diamond drilling, some air core, some RC drilling, we do some detailed multi-element soils and ground gravity diamond drilling. Then we move to the structural and geochemical vectors, infill and step out diamond drilling. And then we do the grid pattern resource drill out, and at that point, that's when you come out with your resource statement. So that's the sort of exploration approach and strategy that we have as a company, which is very systematic and clear. So in regards to timeline, we've done, as I said earlier, we've done all this exploration throughout the first 4 months of this year. It's quite extensive. We're expecting to do a lot more exploration as well through the end of the year. we're going to test to try to find more further high-grade zones throughout the area. But in addition to that, we're also going to be doing some met work behind the scenes to start understanding the chemistry and how it all works from a metallurgical perspective. And then we're also going to be focusing on doing exploration on that large target that I mentioned. So at present, we've completed around 12,000 metres of diamond drilling. It's worth noting we've also got our drillers on site as well, so they're shareholders in the company Cobre. It's important to have them on site because it's quite hard to get your hands on rigs in places like Botswana. So they are very active. They've actually provided us with a brand new air core rig from Australia to come to site, so it's good to have them on site with us. And after that, it comes to the point of unlocking this new district that we're trying to do at present here. So I talked about the team to start off with, but this is our team. These are all sort of geniuses in the sedimentary hosted copper deposit sector. And, but again, as I started off this presentation, I think it's really important to note that it's really important from an exploration perspective to find new copper discoveries. And areas like this need the capital and the time and the expertise to find these new discoveries in places like Kalahari. Thank you for your time. Thank you.
Wonderful. Martin, thank you so much. Great presentation.
Thanks.
Really appreciate you coming out.
Sure.
First of all, do you have questions from the audience for Martin before I ask you a few? I don't see any.
There's one over here.
There's one? There's one? Perfect.
Will it be with an open pit?
No, it'll potentially be an underground mine. So it's actually quite steeply dipping, which is quite good for underground mining. So it's dipping at around about 60 degrees throughout the whole area. And the widths you're looking at are anywhere from sort of 2 metres to 30 metres thick throughout the whole strike length. Yeah, so as a comparison, you can sort of compare it to a Chemicals project, which is that Kubrick Canyon project that I told you about. Their size is around about 100 million tonnes at 2% copper. And that's the mine that's currently in production along strike. So that's a good comparison to sort of compare us to.
Do we have any other? There's one more. Just wait for the microphone real quick.
Among all reasons to invest in your company, there was also something like an ethical aspect. Have I understood that well?
Yeah.
And can you explore on that besides exploring on
Sure.
commodities?
I think from an overall ethical perspective, I was talking about that as a whole in exploration. So in exploration as a whole, because as I mentioned earlier, without exploration capital, there is no discoveries, and without new discoveries, all the government talks about going to net zero 2050, it will not happen. So from an ethical perspective, I believe the ethical super funds and things like this should actually be investing more into earlier stage, discoveries and exploration, because without that, there's no new discoveries, there's no metal, and there's no process to that pathway.
Just wait for the microphone. Can you repeat yourself for the microphone so our online audience can hear you as well?
Thank you for your answer. Is there some more about ethics in your company? I mean, do you also invest in the surrounding environment where you work, where you explore?
Yeah, sure.
Does the local people
Yes.
profit from your
Yeah, we do, and I've actually got so much time for them as well, because the job and the work that they do is phenomenal. So we've got around 20 local Botswanians working for us at present, and 14 of them, for an example, are out on site in 40-degree heat, collecting 20 kilograms worth of samples day in, day out, and the job that they do is absolutely phenomenal. We also employ a Botswanian local geologist as well that work in our team. There was a slide earlier on in the presentation which showed a few of them, but we are very supportive with local employment.
Fantastic. I have a question for you now, because I didn't see any other hands go up. Last chance? No. But Martin, massive land package, and you're a small junior exploration company,
sure,
right? Are you open to joint ventures with majors? Like, are there any ideas in your head to sort of help get a funding partner on board?
Yeah, so I can say that we have been approached, and it's been announced to the market as well. I've been approached by a number of major companies in regards to this belt. It's actually quite a strategic belt that's unfolding here. There's going to be more M&A activity that happens in the past, and moving forward. But my view at present is that you only own 100% of the project once. So my view is to maximise all shareholders' value, and then get it to a point to bring in a major at some point later on down the track once we've created that value for all of us.
Fantastic. Yep. Really good answer to that. Looking forward to some news, obviously, on that front. It's going to be quite exciting.
So one of the majors actually did come out to site, which we did announce, and spent 3 days on site doing analysis of the core, and they're one of the bigger copper companies in the world. So we do have some major interests from those sort of companies. But as I said, let us do the work first, do the drilling, maximise shareholder value, then we go from there.
Absolutely. Keep dilution to a minimum, of course. And last question, maybe, are you looking more for a strategic partner on the project side, or a joint venture partner, or more on the corporate side?
So at present, there's no real discussion at that level. There has been inbound interest from them, but we're going to just remain focused on doing our work and let them come knocking on our door.
Fantastic. Let them buy in the market.
Exactly.
Absolutely. Fantastic. Martin, thank you so much for joining us.
Right, thank you.
Really appreciate it. Thank you so much for coming out. Martin, do you have the clicker? Thanks. Fantastic. All right. Next up, we have Andy back with De Grey Mining. De Grey, I think, Terence, you have to correct me if I'm wrong, but I think they've been nominated 3 times now. Twice? Okay, it's definitely the second time, because I've spoke with Andy's colleague before and did an interview with him as well. De Grey, $2.4 billion company already. They're exploring the Pilbara Greyton up in Western Australia. Really, really interesting prospects. A true tier 1 asset, because the production profile talks about over 500,000 ounces of yearly production. Really interesting. Unfortunately, Andy can't join us here in Amsterdam today. So Willem and the team recorded a video just a few weeks ago, or just a couple of weeks ago, that we're going to show you, and we'll proceed afterwards and maybe save some questions for him as well. Thank you so much.
Oh. Well, Andy, great to see you again. The first time we met was late 2017. We had dinner in Perth. You invited me to come to the project. You invited us to be part of a financing, so you were able to drill and make the Hemi discovery. Is that your recollection as well?
Definitely. No, they were good times up on site. Yes, certainly the capital raising mid-19, that's what really found Hemi, and you guys were part of it.
And that was a very low valuation, you were trading at 5 cents. Now you're almost 170. So what has happened? It has been quite a ride for you guys.
Look, the Hemi discovery has been an amazing journey. It took a little while for the market to understand what we'd hit, but after that, it's just gone ballistic, basically. It's a major discovery. It's in the Pilbara, which nobody really considered that prospective for gold previously. And now we've reset the thinking on the Pilbara in terms of gold.
Yeah, because this is really a game changer. I traveled to the Pilbara first time in 2017 to check it out. I was surprised how underexplored it is and how much metal can be found there, not only gold, but also lithium and nickel. So what has changed in this perspective about the Pilbara in recent years, especially after your discovery?
Look, our discoveries basically put the Pilbara on the map for gold. Previously it was big iron ore mines, big lithium mines, more than anything, and big ports, basically. So, look, the interest in the Pilbara has just skyrocketed. Tenements are very hard to get around us. I think the first year we put the Hemi results out, there was about $150 million raised by other companies to explore around us. So it's just lifted the bar immensely.
So what has changed for you personally because of this discovery? You must be working even harder now.
Look, we've got, personally, it's just exciting. There's no other way to describe it, geologist's dream. But basically for the company, it's been, we've been on a huge rapid building phase, let alone drilling phase and resource growth. Building the people is probably the most interesting thing for me.
So how big is the team now? Because in 2017, you were just maybe 4, 5, 6 of you in the fields, and now?
Yeah, no, I was the first geologist in the revamp of, or the reincarnation of De Grey. It's been around since 2002, but our management group took over in roughly 2016. I was the first geo on site. We managed to convince them to stay in the project, actually. And then since then, I think we have 35 geologists now, a team of about 100 on site now. I think we peaked at about 160 during the drill out last year. And that's only getting bigger, and that's not including all our consultants that are working on the DFS right now. Just continually building.
Your market capitalization when we met in 2017, what was it, 10, 15 million?
Back in 2017, it could have even been lower, I reckon. And then...
what's it now? What's it now?
It's 2.7 billion, I think, is the last I heard.
Yeah, it's been an amazing run. Well, let's stop this introduction. I'll give you the floor. You have 20 minutes to tell the world all about the Hemi discovery and why it's so significant. The floor is yours.
Thank you. Thank you for letting us present here today. I'd just like to take this opportunity to introduce Hemi. It's a Tier 1 gold discovery in the Pilbara of Australia. We have to do the standard disclaimers of forward-looking statements, particularly relating to the mining potential production. We'd also like to acknowledge our First Nations people. We particularly work on the Garriara areas where Hemi is found, so we'd like to thank them for their trust and support. Quickly just mention the board of directors. We have a fairly experienced board. We've been trying to beef that up, and that's occurred with introduction of Paul Harvey more recently, and then Emma Scotney even quite recent again. I think the thing that makes the De Grey team stronger is we're continually building our management team, experienced people. We're building on all the things we require going into the transformation from exploration to production. So a lot more in the community relations, risk and management, and in particular people and capability. We're building a big team. And probably the most recent addition is Peter Holmes. Only in the last month or so, he's come on as project director. He is actually going to build the Hemi plant, etc. So he's very invested right now and rapidly getting up to speed. I'd also like to acknowledge our team. You don't find things without people. It was a small team. Now it's a growing team, and I'd just like to thank our staff and contractors and consultants and other service providers, and also the board for our support that we get to drill more holes. So what is Hemi? Hemi is actually part of the Malina project. It's in the Pilbara, northwest of Perth, or north of Perth, in what we call the Pilbara region. It's a geological region very similar to the Yilgarn, where Kalgoorlie hosts a lot of gold mines, but it's never really been recognised as a gold project area, a gold target. And the Hemi discovery has rewritten that. Hemi is a new style of mineralisation hosted in intrusions. We've rapidly taken it up to 8.5 million ounces by itself, and the whole project up to 10.6 million ounces. We've completed a feasibility study which shows it's technically viable, financially attractive, and we've put out our first maiden resource now of 5.1 million ounces at 1.5. That was mid to late last year, and we're currently doing a DFS which we're targeting for mid this year, probably third quarter of this year, hopefully. The PFS last year showed that the Hemi and the Malina project in production could rank as high as the third biggest in Australia. So that's showing the 5-year and the 10-year sort of production profile. So it slots in there sort of as third against our current production peers. Average production will be around 540,000 ounces per annum for the first 10 years. Total mine life is about just under 14 years, 6.4 million ounces. And as I said, we're hoping to be certainly top 5. Things might change by the time we get there, but certainly it's a tier 1 Australian gold mine potential. So the resource, as I said, was 10.6 million ounces. That's made up mostly of Hemi, with the 8.5 million ounces here. But we do have what we call the regional deposits. The Withnell Mining Centre, which is west of Hemi, with 1.6 million ounces, and then the Wingina deposits, which are roughly 500,000 ounces to the east, for a total of 10.6. And we're looking to grow that continually. And we'll be expecting to put a resource out probably late this quarter, just an upgrade. So where are we today? We basically are a tier 1 project, tier 1 gold mine in a tier 1 jurisdiction. We've completed that feasibility study, as I mentioned, and more recently we've just signed a mining agreement with the Garryarra people late last year, which allows us to go into the mining phase. The mining leases have been applied for and we're waiting for grant there. A lot of the work in the last 6 to 12 months has been de-risking with infill drilling and any metallurgical test work and geotechnical work required for the DFS. At the same time, we're advancing the financing of the project, and we've had strong interest from many of the banks. What I'm going to do now is take you through a video to show you a bit of scene setting on how, so you can put it in 3D in your mind. So we fly 2 hours from Perth up to the Port Hedland. And the Mallina Gold Project represents one of the largest gold developments in Australia, undeveloped at the moment. And the yellow area you see there, that represents our tenement package at the moment. And it covers a lot of the Mallina Basin, in particular some very strong structures that control mineralisation. We're located close to Port Hedland. We're very fortunate to have very good infrastructure near us, with major power lines nearby, a major gas pipeline. And we're 85 kilometres by road to the project, and 90% of that is on sealed highways. As we zoom into Hemi, it's 8.5 million ounces. That's been defined in 2.5 years. We've probably done 8 months drilling since then. We've also got the regional deposits adding another 2.2 million ounces. So all up, we've got a very sizable resource. Now we're zooming into the Hemi area. It's a sand plain between 2 rivers. And this is really the drilling history. So as you see this, we'll just take it through time over the last couple of years. November 19, the first drill holes, Aquila and Brolga. And as we step through the time, you'll see as the drilling grows. And you'll see the focus on drilling out the deposits. The discovery of Falcon came after a Crow. And then as we go further, towards the end of 2020, we get on to Eagle and then Ducon, and they grow rapidly. And as you can see, a lot of the drilling is focused on infill drilling. You'll see lots of orange and red and purple dots start to appear as we do the infill drilling. We've been drilling air core drilling. The drilling that's further out is mostly air core drilling, and that basically helps us target the next phase of drilling to find the next deposits. So we've drilled nearly 1 million metres, or over 1 million metres since discovery. What we're seeing here now is a 3D view of the drill holes and the mineralisation and the deposits coming on. And the most important thing here is just to try and get an understanding of scale. We're talking deposits spanning 3.5 kilometres by 2 kilometres. They're open at depth, and it still has a long way to go. These are just the individual resources making up the total Hemi resource. And now we'll zoom in and show you, this is the applied for mining lease and a bit of the mine design. You'll see the access road coming in from the highway from the east. We come into the plant site, just in here, the ROM pad and the pits, and these are the tailing dams. So we'll zoom in now and have a quick look at where the plant and what it might look like. That's being refined now as part of the DFS. And you'll see the pits proposed pits in the background. And the main thing here I'm trying to show is these are all open at depth. They can get bigger. They potentially can go underground, all of them, with higher grade intercepts or very broad low grade intercepts that could be bulk caved. a long way to go to test up the underground. So really, it's well positioned on a sand plain between the two rivers, about 10 kilometres from each side. So I just wanted to sort of set the scene. Willem came in here with some money, roughly. We raised a heap of money to go and purchase half of the project, and then we went exploring. And we actually hit Hemi in November 2019. But as you can see on the share price, nothing really happened. I think the share price remained at 4 cents at the time for nearly 3 months until people recognised what Hemi might yield. So now we'll walk you through the next 2.5, 3 years and hopefully give you some feeling of the discovery. The other thing to notice on this is just the rapid growth the company has had. It's had its ups and downs as people wax and wane in enthusiasm, but 6.8 was our first resource for Hemi, and now it's 8.5. And the best thing that's happening at the moment is we're making the infill drilling that even a stronger resource for the DFS and reserve statements. So what happened, basically, we were exploring the regional deposits and expanding them, and Taurana in particular down here to the west. That's the first recognition that gold occurs in intrusions, and that style of mineralisation hasn't been encountered in the other deposits. But we recognised that that was actually a high growth type target, and I asked Alan to go back and redo the interp looking for intrusions, and that was our model, to go looking for intrusions that hadn't been tested. All the other deposits occur on subvertical shear zones, so this one was different, and it made us rethink everything. So in 2019, July, we put out an exploration release that said we're going to go and look for what we thought were high value intrusion related style mineralisation, and that's paid off. This is the area that we had some intrusions mapped in the Hemi area, and there was basically 5 targets. 4 of those had drilling already that showed there was anomalous gold, and it was Hemi Fager that didn't have any drilling, and that's now been shortened to Hemi. So that's been the targeting, and then we've completed the drilling, and you saw some of that in the movie. So the first results that we put out at Hemi were basically 43 metres at 3.7 and 25 metres at 2.7. Now these holes were 640 metres apart, with holes 160 metres spaced along the lines. So very wide space drilling, but we really didn't understand too much what was going on at the time. We thought they were fabulous results. We put them out in December 2019 and nobody took any notice. The share price didn't move. These were the first cross sections. This ends up being Aquila, this one, and this one ends up being Brolga. And hopefully over the next few slides, I can show you what the difference is now. This was the interp at the time. How do they match up? In the end, Aquila has gone this orientation, and Brolga is now a big blob just in here. So hopefully a good thing to understand that you're not always right on your interpretations. So anyway, we're here now. Market hasn't even recognised us here, and it's not until February that we actually get to make a reaction on the market. So for 3 months, you could have bought us at 4 cents. This is when the market recognised that we might have been onto something. We started to drill Aquila, and we were getting very consistent mineralisation, subvertical. And this on the right is just to show the individual grades in that mineralisation are very consistent. And that's what got the market excited. And then Brolga, once we started drilling Brolga after that. This is Brolga after a few holes. A very different style of mineralisation, massive mineralisation. These intercepts of well over 150 metres. It's extensive mineralisation, very consistent, and it remains open at that time. This is Brolga now. I think this is a section 20 metres across from where that last section was. The red section here is the proposed pit in the PFS. That's what we call the starter pit. And that pit alone pays for the development, and it pays it within 2 years. The blue pit is the final pit outline on this section, and the Brolga pit is a very special pit in that regard. And why I say that is Most pits, open pits in Australia, sort of would average anywhere from 1,000 to maybe 5,000 ounces per vertical metre. 5,000 would be very rare. Brolga alone is over 6,000, and at times, certainly in the open pit, starter pit, it's 10,000 ounces per vertical metre. And even the other individual deposits are quite high, generally in the 2,000 to 5,000 range. So 23,000 ounces per vertical metre, unheard of in most deposits in Australia. The other thing I wanted to show you was back in 2006, 2007, De Grey actually drilled 2 holes, a line of drilling through Eagle, and they didn't hit bedrock, and they were so close. And now I'd just like to show you what that section looks like now. Basically, we have high-grade mineralisation virtually under those holes, so very unfortunate for the team at the time, but thankfully we've found it now. Ducon is just to show that low-grade initial air core results that you'll see quite extensively in our package that remain untested could yield bigger things. And I think this slide has a high impact because underneath those 2 shallow low-grade hits, this is what we now have. It just shows you the potential of some of these air core holes where we don't understand what we have now, and we haven't done the drilling, and we're about to start that phase from now on. This is just what you saw in the video, just showing you that slide to show scale, and the fact that they all remain open at depth. This is showing a bit of potential. This is at Ducon. This is the PFS pit shell mineralisation still extending below the pit. So if the gold price gets higher, maybe those pits get there's mineralisation on wide step-out drilling at depth. And some of those are very broad intersections, some are higher grade intersections, and there is potential to go underground. Probably right now we think Ducon would be a very good underground target. It has things like 19.3 metres at 7.4 grams, etc. And that is really high-grade veins that we see. So all of the pits demonstrate potential to go underground. The drilling just hasn't been done now. We've been focusing on open pit, defining open pit mineralisation. And this is just a picture of some of the Ducon core, some of the visible gold we see in the quartz veins. Quartz veins are pretty rare at Brolga, and it's really only Crow, Ducon and Eagle you see these overprinting quartz veins, and they have some higher grade vein visible gold with them. So it's just a slightly different style on the mineralisation. Now this plan is to show the amount of drilling that we saw in the video. Lots of infill drilling's been occurring for the last 12 months, and that is to beef up all of the resources so we can convert to reserves and maximise reserves inside the pit shell. Been lots of dedicated metallurgy drilling, geotech drilling. So a lot of the work is focused on detailed drilling for the DFS. What this slide also shows is large areas that have had air core drilling mostly and a bit of RC at Scooby, but lots of anomalous results. And if you remember that slide on Ducon, lots of these sections would actually have better results than the Ducon section. So we just don't know what's beneath all of these. Time will tell. We'll be drilling here for a long time. So this is an area just off Eagle, just to the west of Eagle. We're drilling right now with some extra RC drilling. So we're drilling deeper below a lot of these shallow air core holes. We've had a few good hits, some nice high-grade stuff. So that's probably representing those high-grade veins we see at Ducon. But we also see 6 metres at 5, 6 at 4, 20 at 25 at 1. So they're really encouraging. So fingers crossed as we move out of Eagle and along the Antwerp trend, we'll build up some more mineralisation. So we've been talking about Hemi mostly. Now we're sort of, and on the last slide was just here in Antwerp, but there's a whole corridor of mineralisation through here that's untested outside of Hemi itself. And then we've got Shaggy that's untested properly. Mount Berghaus is a different style of mineralisation, but really poorly drilled. So we hope there's more potential there. The one area that our exploration general manager, Phil, he really likes this area is there's a structure that we interpret along here. It looks like there might be more intrusions along there that have never been touched. There's absolutely no drilling in that area. and we're starting a campaign of drilling this 6 months, and hopefully start testing that area. So fingers crossed that we can come up with some more mineralisation to the north, but that is a 15-kilometre trend that's never seen any drilling within 20 kilometres, 15 kilometres, if not less, from Hemi. Now moving to some of the regional deposits, this is the Withnell lode. So this is the proposed pit in the PFS for Withnell. The yellow lodes are the existing resource, and more recently we've been drilling to the south of the Withnell, and we're getting mineralisation in this location. The red is representing potential lodes. They haven't had enough drilling yet to determine as a resource, and we're putting a lot of drilling into that over the next 6 months and hope to beef up that resource at Withnell. I believe we've got the potential to double the Withnell resource at least, and then there's another 7 kilometres of mineralisation that has been only partially drill tested along strike. As we understand the geology more, we believe there's plenty of targets in this area alone. Elsewhere, we talked about Taurana. I haven't shown too many slides on Taurana in this presentation, but Charity Well is similar style mineralisation to Taurana, and Taurana hosts in excess of 500,000 ounces, and that is the deposit that made us look for the Hemi-style mineralisation, the intrusion mineralisation. What we're seeing here in early drilling is at least 1 kilometre of known intrusions and some very anomalous gold mineralisation in this area. But we believe there's another nearly 2 kilometres to test and other targets of what we propose as intrusions that have never been tested undercover. The reason we haven't drilled to the east is simply we just have to get some heritage surveys. They've now been done and drilling's underway. So we are testing probably a 4 kilometre trend here of Taurana style mineralisation, we believe. And just to put things in perspective, Taurana would virtually fit between these 2 lines of drilling. That's the scale of Taurana, and we're talking something potentially, a trend at least, that's eight times longer. So fingers crossed that this is a growing target, and we have a lot of hope for this area. Regionally, we have 150 kilometres of continuous tenure. What you see here, the red is what we target as shear zone mineralisation, so related to structures. Most of them are partially tested, if tested at all, undercover. And then the purple areas, this is Hemi in here with the purple intrusions. Many of that's interpretive, but we believe there's a whole range of intrusion targets along our tenure, and we are embarking on a much larger program of regional drilling. Now most of the detailed DFS drilling at Hemi is over. We've virtually finished all of that now. We're stepping out, we're pivoting back to exploration. So what you'll see over the next 6 to 12 months, at least, if not longer, will be a concerted effort to go and test outside of the Hemi resource, certainly along the Hemi Greater Corridor, and then other areas like Charity Well, which sits in here. Taurana's having further work, and there's other targets. Withnell, we get doing lots more work. So there's a heavy push towards exploration over the next 12 months. So hopefully we can continue to find more mineralisation and build on those resources. So we've talked about the PFS quite a bit. The DFS is happening right now, and that is obviously taking it up to a much higher stringent level of study, which we can do financing on. So a lot of the work has been going on of increasing the resource base at Hemi and building the resources up elsewhere. A lot of the work has been about optimising the pit shells at Hemi, and that has included a lot of infill drilling and extension drilling to maximise reserves. That coincides with increasing the indicated mineralisation because the drilling's more robust and more detailed as the result of increasing reserves. The other thing that we're doing is bringing in probably Taurana and Withnell into reserve status. They are the first 2 regional deposits that we expect to be mined outside of Hemi. Hemi is the main driver and the backbone of the whole project and is a standalone deposit in its own right. These would be brought in at a later date. The other thing is, as time progresses, there'll be some potential to bring in underground. Because as we're taking the pits down, there is the potential to bring in an early underground, which would help production profile, we believe, as we move forward. And obviously, the new drilling that we're embarking on now is about finding new discoveries and extending current resources. So that's obviously where we believe there's a lot of potential still left in our 150 kilometre long project. So where else are we heading? We're completing the PFS and all the project studies. Most of the physical work has been done other than finalising engineering and development schedules and cost estimates. So we expect to have most of that done by mid-year. So we're sort of hoping for third quarter would be when those results would come out. We're pushing approvals, so statutory permitting, mining lease grants, environmental approvals will be submitted shortly. We've already started talking to banks about funding and the strategy there, building up to a final investment decision later in the year. One of the things with the pressures on the industry at the moment is long lead items. So that's a key focus of us. What do we need to order early? And that's certainly where a project director is focusing right now. Organisational capability. I mentioned this about early in the presentation. Our team is invaluable, and we've been building that and increasing our capability so we can build this and transition from an explorer, which we believe we're pretty good at, and we need to build this. So we're building that project team, that development team, and then there'll be the organisation going forward through production. In the meantime, in parallel, we want to keep that exploration going. We believe there's many more to be found up here. This project area, we believe, has the potential to keep finding discoveries for the next 10, 20 years. So I can see a long life here. We've already see Hemi at nearly 14 years. And if we add some more discoveries, I can certainly see a 20-year production history in the future. So fingers crossed that we drill the right holes and we attack the right areas. But that's what the focus is on. So I'll finish up there. If there's any questions, I'm happy to answer them.
What an amazing story, Andy. You must be a proud geologist. It's quite rare to make a discovery like that.
Look, I think there's a few of us proud, not just myself.
So I know you want to build it into one of the larger new gold mines in Australia. But we all know the majors like Newmont and Barrick, they are on the hunt for discoveries like this, with a size like this. So can you stay independent?
Look, we believe so. We've done our own internal assessment on what's best for shareholders. And all of the numbers and all of the spreadsheets say the best value is to build it ourselves. Obviously, we can't 100% control what others do. I would be amazed if the bigger companies aren't looking in depth at what we have. But in the end, we are setting ourselves up to build this. That's our focus. Obviously, others would be looking, and rightly so. But the best value for our shareholders would be to build it, is our belief.
Would you be interested in a scenario that you'll own still 20 or 30% and you'll develop it in a joint venture structure with some of the majors? Or?
Like I said, all of the spreadsheets and versions that we can think of, the strongest value is to build it ourselves. Financing is probably not an onerous task as for most. Compared to most developments, the Hemi deposit is special. It's a rapid payback, high profitability. The financing is probably not as difficult as everybody expects because it's such a robust project. So yeah, I don't believe that's the best route personally. So I would still strongly believe we would be looking to build it ourselves.
How much money will you need to build it? It's over 1 billion, I think.
Yeah, look, the PFS was basically, I think it's 1.2 just over 1 billion. We're waiting to, the DFS is really what we've got to hang our hat on. We're waiting to revamp all of the costings. That's obviously where the more detailed information will come from, and the financing will be based on that. So we're talking around $1 billion. But like I said, that Brolga starter pit alone is the crux of what drives the Hemi production in the first 2 years, and that is the big driver that pays that back quickly.
And how long do you need to be in production? 5 to 10 years, or?
Look, most of the slides I showed 10 years, but the PFS mine life was just under 14 years. That really doesn't. That's probably conservative in my mind. Gold prices going up, that would have been done at, I think it was done at 2,400 Australian. So, currently the gold price is 3,000 Australian.
Yeah, you're talking about mine life. I was pointing towards when can you start production and how many years?
Sorry, misinterpreted, sorry.
Yeah.
Look, we're aiming for 2026 sometime, probably later in 2026. But it is all subject to the environmental approvals first, and that's probably a time frame that we can't control. So, look, we believe we're a long way ahead of what we need to be. So, look, we'll target, we'll say 2026. Whether that can be achieved will really be up to the approvals process.
But that would be an amazing result, because then you go from discovery to production in 7-8 years, and that's quite remarkable.
Oh, definitely. You're really talking. You're probably talking only 6 years from discovery to production. Most mines, you're talking 10 plus. Certainly in Australia. Hemi has had the luxury of we were able to drill it out quite rapidly because of its scale. To be the ability to drill holes quickly, and in many times we didn't have to wait for assays. We could see the mineralization, and we kept going.
One last question. We traveled to the Pilbara for gold in 2017. There's a lot of gold to be found. But now with the battery metals, we know there's nickel, there's lithium. You even have a lithium project. What do you want to do with your lithium project, and how prospective is the Pilbara for battery metals?
We certainly have some lithium potential. It's been on the back burner for near on 4 years now. The board has been assessing what we do with our lithium. We actually have a couple of small base metals resources. So we are looking at that. We haven't made a final decision yet. There's a couple of alternatives. Do we drill it ourselves? Do we partner with somebody? So we're still working through that. Look, the focus has been on building Hemi and getting that going, and really they just haven't had the focus for the last 3 or 4 years. Elsewhere in the Pilbara, look, there's 2 big lithium mines only 40, 50 kilometres south of us. We've got the right rocks. We've got some interesting anomalous results initially, 4 or 5 years ago. Certainly everybody rings us to see what we're doing with it. But at the moment, we're just working through what we think's best for shareholders, how they get the best value out of it.
Well, we as shareholders would like to see a spin out of the lithium targets and tenements, because I think that might add a few, 100 million, maybe even more on value.
Yeah, and look, that's certainly been one of the possibilities in our assessment. So, we. Like I said, if that's the best thing for shareholders in the board's mind, that's probably what will happen. But we've got to work through all of that.
Well, thanks. Great presentation, and congrats on the nomination, and hope to see you soon.
No worries. Thank you, Will.
Well, definitely a worthy nominee. True tier 1 assets, and plenty of them within a belt. So really worth taking a look at. Up next, and definitely last but not least, i-80 Gold, a presentation I'm personally looking forward to, because I need to catch up on their discoveries they've been making. It's a developer. They're in Nevada, And it's oftentimes developers don't really put any effort into exploration during their development phase, but I-80 has made 5 discoveries since mid-2022, and I'm really looking forward to hearing from Tyler Hill, because he's their chief geologist. There's nobody else who could tell us more about the discoveries, and Tyler, it's great to have you here. Thank you so much for joining us on stage, and go ahead.
All right. Thanks, Kai. Thanks, everyone, for being here today. Appreciate you coming out. So, like Kai said, I'm the chief geologist for I-80 Gold. So today we'll talk about our hilltop discovery in Nevada, and as well as some other things about I-80 Gold. Just general disclaimer, I'm sure I'll make some forward-looking statements. So before we get into the discovery talk, I just want to touch a little bit on gold and why gold is important and why I think you should own it. So during the 90s and 2000s, central banks were generally selling gold reserves, and you can see that in the red here. But something has changed in the last decade or so, and whether that's deglobalization and challenges to the US dollar as a reserve currency, or just diversification away from the US dollar due to the tendency to impose sanctions, many central banks have been buying gold in the last decade. And many countries are now selling the US dollar and buying gold, particularly those BRICS nations. And so the move away from the US dollar will likely lead to a lower dollar, and gold will be the biggest benefactor. Since 2000, gold has been one of the few currencies to have realized consistent gains of over 9%. Gold is the world's only currency with no political attachment, no debt obligation, and no printing press. And some consider gold to be the world's first currency and maybe also its last. So we are a gold-focused company, but the discovery we'll talk about today also has a very significant zinc component, so I want to touch on the zinc market a bit. So the primary use for zinc is in galvanization of steel, and that drives about 60% of its use. There is a growing demand, and most of that is coming from the production of wind turbines, both offshore and onshore wind turbines. So a 10-megawatt offshore wind turbine requires about 4 tons of zinc, and a 100-megawatt solar power park requires about 240 tons of zinc. But the question remains, can supply keep pace with demand? And that's a common theme you'll see, I think you've heard today throughout the talks. Because it does take 5 to 10 years to permit and build a mine on top of that discovery phase before then. So it's very different from something like the oil and gas industry, which Joanna talked about earlier, where you drill a well and maybe in weeks to months you're producing and you're making money. In the mining industry, it's quite a bit different. So there is an estimate that we'll need about $1.7 trillion of investment over the next 15 years to meet our climate goals. So there's going to need to be a significant amount of investment in the mining industry. Uh-oh, our image isn't showing. We are in Central Nevada. All of our projects are in Central Nevada on the Carlin and Battle Mountain trends, which there should be an image here to show that. But this collectively represents the world's most productive gold district, with over 200 million ounces of gold being produced out of this small postage stamp in northern Nevada. We are the largest holder of gold resources in central Nevada, next to Nevada Gold Mines, which is a Barrick and Newmont joint venture. So we have about 15 million ounces of MI&I resources in gold and about 175 million ounces of silver resources. Ruby Hill is our flagship asset and is host to multiple gold and polymetallic deposits, so that's gold, silver, lead, and zinc. And the discovery of the Hilltop Zone in mid-2022 has quickly become the focus of exploration for this year, and that's what I'll be talking about today. So a little on the Eureka District and the history of it. So it's actually one of the earliest districts discovered in Nevada. It was discovered in 1864. And this was the CRD mineralization. So if you were around for Kit's talk this morning, this is the same type and style of mineralization. It's massive sulfide mineralization and polymetallic. It took them about 5 years to figure out the smelting technology to develop these ores back in the 1800s. And after that, they were off to the races, and this district produced quite a bit through the late 1800s into the early 1900s. There was the discovery of the FAD deposit in the 1930s, and in 1941, a shaft was sunk to 2,500 feet there to go after that ore body. However, when they were sinking that shaft, they hit a fault that was holding back a lot of water. It flooded out the shaft, and so they never got down to actually mine this ore body, and it still sits there today, and we'll talk about that a little later. There was additional shafts sunk in the district, some more mining, and then kind of between the 60s and the 90s, the district was largely dormant. So it was purchased out of bankruptcy by Homestake in 92. They very quickly found what is the Archimedes pit here. It's a Carlin-type gold deposit. It produced about 1.5 million ounces of oxide gold. It began production in 98. Barrick Gold later acquired Homestake, and the mine was closed in 2014, and Barrick sold the property to Waterton, which is a private equity group, in 2015. They did a little amount of work, not much, didn't do much mining, and we acquired the property in 2021. We quickly started an exploration drilling campaign, and we've made numerous discoveries, and we're going to focus on the Hilltop Zone, which is just actually on the southern margin of the pit you see here. All right, this slide is all. We have multiple deposit types. So we have refractory gold at Ruby Deeps. We have oxide gold underground in the 426 zone. We have oxide gold open pit mineralization, polymetallic CRD mineralization, as well as skarn, zinc skarn base metal mineralization. We do have an operating heap leach facility, on-site oxide milling facility, and our key initiatives for 2023 include completing a permitting program to begin underground production, a PEA and resource update for Ruby Deeps, which is the gold-only portion of the deposit. We're advancing metallurgy for the polymetallics. We have ongoing exploration and definition drilling, testing high-priority geophysical anomalies, among others. And we'll have a year-end resource update that will include the base metal component. In this image here, so this is the Archimedes pit. So the discovery we're talking about is in this area, what we're referring to as Hilltop. Some of these other red polygons are other polymetallic CRD deposits throughout the district. So that FAD deposit where the shaft was sunk in 1941 sits right down here to the south. And this was our previous property boundary. However, we have entered into an agreement to acquire this land down here to the south about a month ago now. All right, looking at a district scale view. So there are deposits over about 10 kilometers of strike length here. All of these red deposits are polymetallic CRD deposits, with the gold being basically gold-only Carlin-type deposits. The Eureka District ranks as one of the world's highest-grade CRD districts. The historic Ruby Hill mine, which sits right here, it produced almost 2 million ounces of gold at about 0.83 ounce per ton gold. It also produced about 40 million ounces of silver at around 20 ounces per ton. And it also contained over 15% lead. So it was very, very high grade. And on gold alone, if it was producing today, it would be the highest grade gold deposit in Nevada. The Hilltop Corridor, which is this area south of the pit down to the FAD area, is an untested exploration area that we're going to focus on this year. And it's important to point out there's been no significant exploration for base metals in the district since the 1960s. So there's a real opportunity here for the base metals. All right, so we'll zoom in here on the pit and what we've been drilling. So we've discovered both CRD and skarn sulfide mineralization in our initial drill testing here. The discovery hole was hole 25 right here in what we now define as the lower zone. 238 grams silver, 11% zinc, and 9% lead over 9.4 meters. After that hole, we came up to this area to drill some additional holes targeting this lower zone. And that's when we discovered this upper zone, which sits only 150 meters below surface. And our discovery hole there was hole 43 with almost 1 gram gold, 515 grams silver, 10.5% zinc, and almost 30% lead over 28.3 meters. So quite a spectacular intercept. Since then, we've kind of been off to the races, drilling off around this upper zone as well as the lower zone. We've done considerable step-out drilling to the east, and we've also identified the controlling structure here, which is known as the Hilltop Fault. So this is a near vertical fault zone, and it strikes kind of to the northwest here. Our additional drilling out to the east, so this was at the end of last year, hole 61, 12.3% zinc over 39.6 meters. And then this hole, hole 9, and hole 10, we just press released these about 2 hours ago, so it's hot off the press. So 2310, 226 grams per ton silver, 9.7 zinc, and 10% lead. And that was just out to the east here. So this is potentially a completely new zone of CRD mineralization. Further out to the west, we had 9.2% zinc over 3 meters in a new zone a little deeper down. And then a bit closer to the surface, 6.7% zinc and 3.5 grams gold over 18.3 meters. So we continue to drill along this corridor, and we will continue to step to the south to target more of these northwest striking fault structures. All right, a cross-section here of the mineralization. So you see the upper hilltop zone here, the lower zone down here. So they're fairly flat-lying ore bodies. There is a large intrusive body off to the east, which is probably the source of the mineralization. And we get into skarn mineralization here off to the east, where we're closer to the intrusion. So drilling in 2023 has extended mineralization along the hilltop fault structure over a strike length of 750 meters. The polymetallic base mineralization discovered by us in 2023 includes that east hilltop intercept here, and then the CRD breccia zone, which is out here to the west, and then this deeper zone that we're calling the Gettys zone down here. So we have a large-scale multi-rig drill program underway. We have 5 rigs out here right now drilling away. The hilltop corridor further to the south is almost completely untested, so that gives us another 1.5 kilometers of strike length to the south to continue drill testing. So this is just a little more on the cross-section here, and I think some of these slides got moved around, but we'll just point out some of this is very high-grade gold. So one of our intercepts here, 60 grams per ton gold, 908 grams per ton silver, 15.7% lead, and 1.1% zinc over 10 meters. So that's around $5,000 a ton in rock value. So it's very high grade, and that's makes this a very good deposit. So geophysics has been important to help vector in and target these new zones of mineralization. So we had an IP survey done here last fall, and it really highlighted, it really highlighted this upper hilltop zone. So where we had already discovered the mineralization here, but the IP survey showed a strong chargeability anomaly there. We did an IP survey further to the south, and it showed an even larger chargeability anomaly here to the south, and that's what we're calling our 4H target. And so we'll be drill testing this year in hopes of finding more CRD mineralization. We've also done magnetotelluric geophysics, which has also been important in identifying fault structures and additional mineralization. We do have development plans, so we're planning to go underground at the end of this year, and we'll portal out of the pit. And so the first mineralization we get to is the 426 zone. So this is a gold only Carlin type zone here. And so part of this is oxide and the rest is sulfide. So we'll get under here, do drilling and mining. We will drift over to the Blackjack deposit. This is a zinc skarn right underneath the bottom of the pit. And then we'll drift to the south to get at the hilltop zones and that mineralization there to continue to define that from underground. A little more on the development plan, so you can see the planned development here in the white with the ore bodies as well and the mineralization. So the upper hilltop zone sits here with the lower zone down here. This is our Ruby Deeps Carlin sulfide zone, as well as the 426 zone in here, and then Blackjack right underneath the pit. So we're looking forward to getting underground and drilling this out from underground. It's cheaper and more efficient to drill that way. All right, so this is the acquisition I touched on earlier, but this was an agreement we entered into about a month ago. So this is with Paycore Minerals, which we are taking over. And they have this property just to the south of us here. And so they had been drilling in this area known as the FAD deposit. There is a historical resource. It's non-43-101 compliant, but we'll be looking to bring that into an updated 43-101 resource. It's about 3.5 million tons at 5 grams per ton gold, almost 200 grams per ton silver, 8% zinc, and almost 4% lead. So again, very high grade. It's located in close proximity to our processing infrastructure, and it's a long trend for mineralization being drilled at Hilltop. So this is our discovery area. This is that Hilltop corridor further to the south, where we will do significant amount of drilling this year. And then this is the FAD deposit here, which is this 3.5 million tons. So we expect this deal to close here in just a couple weeks. And there is drilling going on down here with 2 rigs right now. Again, just another look at the, so this is the chargeability anomaly down there to the south. So this is our upper hilltop chargeability anomaly. This is the one down to the south, which is much larger. And some of the first few holes we have planned to test that area. So we have multiple anomalies identified and will be tested in the 2023 program, and that includes the 4H target. We have a deeper MT target and a Spring Valley target. Recent drilling at FAD, so on that previous slide, some of their intercepts, 27.4 meters at 8 grams per ton gold, 79 grams per ton silver, 10% zinc and 1% lead, so very high grade. 14.8 meters at 7 grams per ton gold, 376 grams per ton silver, 6.3 zinc and 10.3 lead. So very high grade there, and we're looking forward to doing more additional drill work. An analogous deposit to ours, these slides are, some of the images are messed up here, but would be the LaRonde mine in Canada, which is one of Agnico Eagle's flagship mines. It's similar grade, so the LaRonde mine is about 4.6 grams per ton gold, 20 grams per ton silver, 1% zinc, and about 0.25% copper. And this is Agnico's stock chart here over the years, and I think the discovery of LaRonde was made somewhere in the early 90s, so you can see kind of how they've taken off since then. So I think the last few slides here, we'll go back and look at some of our gold zones. So the Ruby Deep zone is something we've been drilling over the last year to year and a half. It has significant high-grade gold intercepts. 33 meters of 20 grams was one of our best intercepts. We had about 70 meters of 7.5 grams as well. It remains open along strike. And our recent drill hole here, hole 23-9, expanded that 200 meters to the south with 5.8 meters of 9.9 grams. This is a long section of the Ruby Deep zone here, so we're looking off to the east. The mineralization is fairly flat-lying, and it's about 700 meters in strike length, and then we extended it another 200 meters with this hole 9 that was press released today. So we'll do some additional infill drilling here in between, and hopefully continue that expansion further to the south. You can see some of the intercepts, 9 grams over 50 meters, 10 grams over 41.8. So it's a very continuous high-grade ore body, and the rock quality is actually fairly good for a Carlin-type deposit. Often Carlin-type deposits aren't like a lot of those deposits in Canada or Australia where it comes out as stick rock. Some of this stuff can be pretty soft and clay and sometimes difficult to work with, but it looks like it's pretty good here at Ruby Hill. All right, so in summary, we are a growth-focused company. We have an organic growth platform with the goal of becoming Nevada's second largest gold producer with sustainable development opportunities. We are executing our plan to grow reserves, resources, production, and cash flow, and we're prioritizing reserve increases and mine development with minimal share dilution. Our CEO is Ewan Downey, who has been involved in Discovery's prior companies. So Wolfden Resources was a company he was part of, I believe CEO, that won the Prospector and Developers Association Exploration Award in 2003 for their discovery at the west zone with Wolfden Resources. And then a little on the banks here that cover us. So we're covered by many of the large Canadian banks. And then our share structure here, fully diluted, about 266 million shares. We have a market cap of about 800 million Canadian currently. And that's our mineral resources. And I believe that's all I have. So thanks.
Fantastic. Well done. Thanks. Well done. We have time for one question before we get to the award ceremony. Does anybody have a question for Tyler? Fantastic. Tyler, you'll be around? Yeah. There's a meet and greet after Willem's keynote as well, just outside. Make sure to grab him, because I think I-80 is doing a great job there in Nevada, and following the discoveries has been fantastic.
Thanks, guys.
Awesome. Tyler, thank you so much. And now we're coming to one of the other, or the next highlight in the program. It is the awards ceremony, and it's my pleasure now to introduce Terence van de Hout. And, he's the chairman of the jury. He's a managing partner at the Commodity Discovery Fund. And Terence, you'll be presenting a report on the award. How did you select the companies? What were the criteria? So the floor is all yours. Thank you so much for joining us.
Thanks, Kai. Thanks very much. I want to begin by saying that I am very proud of the companies that have been presenting to you today, regardless of who wins. These companies are the best of the discoveries that we could find, and we expect a number of them, if they haven't already done so, to be of tremendous value to the fund, to our portfolio. So thank you very much for coming. It's not the case that these companies have come to us for their marketing activities. We have selected them ourselves. So thank you for coming. We get to the formal bit at this point, and I am going to read to you excerpts of the jury report as the chairman of the jury. And I will cover the companies that have been presenting to you today in alphabetical following. And I will read to you a couple of things as to why we think these companies are of interest to the fund. So this may get a bit boring, but at the end, we'll get to the award ceremony, and it will get a bit more lively. So we'll start with Abra Silver. Abra Silver holds a world-class silver and gold deposit at the Diablillos project in Salta province, as we have seen in Argentina. Abra acquired the project in 2016 and have advanced the project steadily by almost 30 million ounces of silver and adding 500,000 ounces of gold over the last 2 years. Despite the already large resource, deeper drilling shows potential for further expansion at depth. Recent drilling has returned 5 holes, achieving the top 10 status in the best grade times thickness of the past 2 years. We've seen that table shown by both Aya and Abra, as both show up in that table. A second, more southerly zone was discovered in August last year. This new zone, called the Jack, is much higher grade, is much thicker, is more robust, and we expect this to add ounces substantially, which will be good for the grade and the economics of the project. The deposit, because of its lowish grade, is leveraged to the metal prices and should do very well in what we believe is a pending bull market in precious metals. Aya. Aya Gold and Silver is effectively a turnaround story, as we've seen, transforming from a small high-grade silver mine in Morocco that was poorly operated to the discovery of a potential Tier 1 silver discovery at Zagunda and a ramp-up to a highly profitable large-scale production. A second intriguing polymetallic discovery at Boumadine will likely shape the company for decades to come. In a world where large, high-quality silver deposits are an exception, it's even rarer for a company to possess 2 such projects. Aya is the first African silver producer, starting production in 2014, and currently is the only pure silver producer in the world. Ranked by silver grade times thickness, as we have seen, Aya has the second best silver intercept in the world of the last 2 years and has 3 holes in the top 10. Aya's made an impressive run since 2020 from a low valuation of $1 to over $11.50, which now reflects much of the expected expanded production. And once Boumediene proves its potential, we expect the Aya valuation to go into second gear. Cobra. Australian-listed Cobra has made an intriguing recent copper discovery in Ngami, Botswana, along the Kalahari copper belt, which hosts a number of profitable copper operations. Cobra's discovery is a classic sedimentary hosted deposit that has all the similarities of some of our previous investments, and that's what piqued our interest initially, such as the T3 zone, which was held by Mod Resources, sold to Sandfire, and the Banana zone, sold by Hannah Mining to Kuprick. Although not massive at this stage, these discoveries are significant because of the fact that they are at surface, almost, and because of the long strike potential. They show great continuity and will be much quicker to get to production than the mammoth porphyry projects elsewhere that take an average of 20 years to develop from a discovery. This potential ease of production makes new discoveries along the belt easy takeover targets, and previous projects have been acquired for around $150 million US dollars in the past. Cobra's discovery was made only 9 months ago and will need more time to develop. However, given the extensive land package that hosts a number of parallel limbs, as well as neighboring miner Sandfire's exploration collaboration agreement, and the necessity of new sources of copper to cater for the green electrification revolution, we believe further discovery in Botswana by Cobra will make the company an obvious takeover target. De Grey, the Hemi discovery in the Australian Pilbara, was made in December 2019, and although not a blockbuster at the time, this coincided with high-grade intercepts at 2 other proximal targets. After only 3 years of drilling, Hemi now shows 8.5 million ounces of gold from 5 deposits at surface, as we have seen in the presentation. CDFund took place in a financing just before the Hemi discovery at 5 cents in July 2019, following the discovery of the melon seed conglomerates at Loudon's Patch, as well as the Malana and Taurana discoveries. At a current price of $1.60, that's over 3,000% rise for the portfolio, making this one of our biggest winners ever in the portfolio. We believe the immense size of the deposit will ensure that many major producers will have an interest in snatching Hemi in the future, despite Andy's talks that he wants to produce everything himself. And it's one of the very few Tier 1 gold deposits available that is not in the hands of a major producer already. With an NPV of 2.7 billion Australian dollars after tax, Hemi has astounding value. High gold mining. With an original discovery hole of 109 meters at 10 grams per ton and significant values of zinc and copper, High Gold's JT discovery in Alaska jumps off the screen immediately. Follow-up holes superseded this discovery, returning the fifth best gold hole, grade times thickness, for the industry in 2022. High Gold has now defined a 1.2 million ounce gold deposit at roughly 9 grams per ton. The discovery is still open on a number of sides, and an inferred offset, which is a transported part of the same deposit, has so far been elusive, but is likely yet to be found. On top of that, a new discovery at Difficult Creek, some miles to the north, has returned the third best hole of exploration companies in 2021. And although this is still small, they've only just started there, this clearly is another rich deposit. The company rose from 60 cents to $3 initially on the back of the outstanding first holes. With the decent-sized financing that has just been announced, the company will be able to follow up on the initial drilling success and should start to reflect the valuation of a company with a multi-million ounce perspective. I-80 is an advanced explorer that started producing gold in 2022 on a small scale at Granite Creek. It's developing a number of gold projects in Nevada simultaneously and is therefore somewhat more difficult to see as a standalone discovery. However, we are very intrigued by a new set of discoveries around the Ruby Hill area, which seem to indicate the existence of a large classic Nevada gold system that includes possibly heap leachable oxides, Carlin styles, carbonate replacement deposit, and skarn-type mineralization. At Ruby Hill alone, we believe I-80 has an outlook on a world-class set of deposits when all is said and done. And CRD-style polymetallic mineralization in particular has become quite fashionable since South 32's takeover of Arizona mining for roughly $1.9 billion US dollars in 2018. I-80 is run by a group of established mine builders and operators, and which has facilitated a number of multi-million-dollar takeovers in the past, with company-wide total assets of 14.5 million ounces of gold, 180 million ounces of silver, the possession of a coveted autoclave and processing facilities, and 3 projects coming to production. Within the next 2 years, we expect I-80 to hit the revaluation button sometime over the next 24 months to reflect a profitable mid-tier gold producer with a very high risk of being acquired. Western Alaska. Western Alaska Minerals has made an exciting discovery at their Waterbuck Creek project in Alaska. After the August 22 discovery, Western Alaska rose from $1.75 to over $6 in a matter of days. The company has found the already substantial fingertip of a CRD deposit that typically holds long mineralized fingers morphing into a skarn and possibly towards a porphyry source. At current dimensions, we believe the fingertip already hosts a sizable silver polymetallic resource, and that's after just 9 months of drilling. With the company targeting around 100 to 120 million ounces of silver equivalent there alone. The company has a sense of where the rest of the finger is that could lead to the porphyry source, and large CRD analogs indicate that there are often a number of parallel fingers, a thesis the company is very eager to prove. It's still very early days for the exciting discovery by Western Alaska, and we need to give the company time to further develop it as we enter only the second drilling season after the discovery. At a current valuation of approximately 100 million, we feel very little of the discovery is priced in at the company, and it has a lot to look forward to. So now we come to the conclusion. All 7 companies, to varying degrees, bear the hallmarks of an outstanding discovery, otherwise they would not be presenting here today. Either a blockbuster hole, a large collection of high-quality holes, an outlook on a world-class deposit, a Tier 1 or possibly Tier 2 project that would be of interest to a very large producer, very rapid exploration success, and further potential for value expansion. 2 factors make this year's winners stand out. For one, there's been tremendous value creation in the CDFund portfolio, which, when all is said and done, is really the only reason we invest at all. And secondly, the speed of exploration and the size of the deposit defined are extraordinary. The CDFund investment thesis is predicated on Tier 1 discoveries that will get taken over by major producers, and the huge Hemi deposit fits that bracket precisely. So after being runner-up in 2021, the winner of the 2023 Discovery Award is De Grey Mining. We're supposed to show the video. Yeah, the video.
Fantastic. We filmed a short reaction video with Andy Backsmith just late last week, and we have his reaction here on screen for you.
De Grey Mining wins the 2023 Discovery Award. I have the award here. I'd like to congratulate you. We've had an artist make it from a core that you've sent. That is the core. I can't see any gold in the core. Can you explain to me what we're seeing here?
Yeah. So first of all, it's amazing to win the award. The core that you have got there is part of Hemi. I think it's actually from Brolga. That Brolga it probably is actually one of the first few drill holes I think we drilled, part of that. It's part of the original host rock. You won't see any gold in it because there's actually very little visible gold in Brolga.
That's right.
It's actually all associated with the sulfides, but very good looking core.
It is. It's fantastic. Yeah.
If I may, I'd like to actually just say a thank you to Commodity Discovery Fund itself for investing first, Willem, and thanks for hanging in there and the support. But also all our other shareholders and certainly our staff. Couldn't be done without them.
Great. Well, thank you very much for your presentation and congratulations again for winning the award. And take care.
Thank you very much.
Should we do some questions first? Yeah, so I'm going to ask Willem and Terence just a couple of questions about why they picked De Grey, A, as a winner, but also as an investment, because I find it really interesting. Andy pointed out early on that they made a discovery and nobody cared. The stock was at 4 cents. Even you guys came in even after the fact, not before the discovery. So what prompted you to invest that early and to put money at play here?
We went on a fact-finding mission to the Pilbara in 2017 because Novo Resources had this special discovery of the watermelon seed nuggets. And on that fact-finding mission, we also went to De Grey because De Grey owned all this land next to Novo. So that's when we learned about their tenements and how prospective it was. And I was always intrigued. They had this whole belt, over 150 kilometers. And it was quite clear there was quite a bit of gold to be found. But everybody was looking for the watermelon seed nuggets. Well, that story died down. We lost some money on that one. But we were always intrigued by the Hemi project and De Grey, so we decided to join that financing. It was very hard at that time for De Grey to survive financially. I think the market cap came down to 6 million. And I think we weren't cash rich at that time, but we put down 50K, 50,000 euros.
A bit more than that, I think.
And that was at the 5-cent valuation. And the late response to the first discovery news, it happens time and again. We've seen the same with Greatland Gold. It didn't move for 1 year, I think.
Next Gen didn't move for 2.5 years.
It's when you actually, like Nikki Etzet-Bell made that point in another presentation as well. That's when you, as investors in this space, following closely, have an edge. Because the market needs time to digest a discovery or something. That's when you can invest.
Sometimes it's very obvious.
Yeah.
Not always, but sometimes it is.
But sometimes you start questioning yourself because you know it's a good discovery. You put money in and it goes down. Greatland Gold went down by 50%. And then, you know, it's really the question, is the world mad or are we making a big mistake? So
you're still shareholders in the company, obviously?
Yeah. Oh, yeah.
Have you taken money off the table along the way? Seeing that chart, I would have been gone at 10 cents personally, probably.
But also, it shows, because many people think that my example, which I always use, of Aurelian Resources, that was beginner's luck. But you can have this kind of success time and again. It's very unfortunate that, you know, the whole market has been coming down for the last 10 to 15 years. So you really can't show the value of discovery investing in a declining market. But once a bull market returns, the returns will be staggering.
The great takeover candidate in your mind, Terence?
Yes, definitely. As I said, it's one of the very few companies, it's the only company that has an outlook on 10 million ounces of gold that is independent of, that has a feasible project of 10 million ounces of gold that has an outlook of more, and that is not, that's independent, that's not part of a Newmont or a Barrick or a big producer. So.
Yeah, it ticks all the tier 1 boxes, obviously. Fantastic. One thing we thought about doing as well, just send a selfie to Andy with you, the audience in the background. I was going to ask the director in the background to turn the lights on so we can see everybody. And I would love for everybody to stand up real quick and maybe cheer, clap your hands while we're taking a selfie for Andy and the company, because you're all our winners here as well.
Terence?
All right.
Okay, there you go, Andy. Come on, yeah.
Hold on, 1 second, 1 second.
Yeah. One more.
One more. Fantastic. Thank you so much, because you all are winners as well, because you're investors in the Discovery Fund and participated in the share price success as well. I think this covers the awards ceremony, and now it's time for Willem's keynote presentation on the Great Reset and what is happening in the world.
Reset,
the big reset? You said Great Reset earlier.
No. Oh, yeah? Oh, well. Yeah, sorry for this picture. Casper, he thought it was a good picture, but this one is 15 years old, so I'm not aging well in a bear market. So I've got very limited time, but I promised you to give an update on the big reset. And when I traveled to China for the presentation of the Chinese edition of the big reset, it's Klaus Schwab who turned it in the Great Reset 2 years ago. I asked a Chinese professor, the book was published by Chinese Renmin University, and I don't have an academic background, and the Chinese are not publishing this book because they think I'm a wonderful guy. It turned out that this book and my analysis about the Western fiat, the dollar system, came quite close to China's view of the dollar system. So I was intrigued that, like I said, I've been cancelled here by the media because I have an alternative view. But in China, it's the mainstream view. And when I asked this professor to give me a title for the presentation at the International Monetary Institute in Beijing, he said, after waiting for 44 years, and I first didn't understand what he meant, but this was 2015. So when I took 44 years off, then it was 1971, and that was when President Nixon took the dollar off the gold standard. And that made a few things clear to me. So the Chinese really understand, this was during a speech at the Chinese university, the Chinese really understand that they really understood very well that the current dollar system is in its final phase, and they have been preparing for quite some time and waiting for the next phase for the international monetary system. The subtitle of the big reset is The War on Gold and the Financial Endgame. While I was working for RTL Television, I did a lot of research, wrote my first book, Als de Dollar Valt, and always wrote some articles explaining that gold would be the best hedge because this system of constant debasement of currency would lead to a revival of gold, and gold being the ultimate form of money. It was quite clear to me that there were forces at work coming from the US keeping gold down because the dollar is not gold-linked, not gold-backed anymore, so gold became the enemy for the current dollar system. And I wrote this, 21 years ago, that JP Morgan was the big enemy because there was enough analysis done by many other experts that they were shorting the market. And this was in 2001. And I was quite convinced that gold just bottomed out because it declined for 20 years between 1980 and 2000. So I started to invest myself in gold and silver, started to look into the gold and mining shares. I wanted to hedge my own net worth. I had some real estate investments in the Netherlands. And I was advising people to buy gold as a hedge from that moment on. And I recently found the first manuscript for my first book, Als de Dollar Valt. And it has been a constant theme in my work to warn about this debasement of the currencies. I was warning about a pending huge crisis in the US in the housing market. And over time, people got so fed up with me that when you were following the mainstream media here, investors in gold, they were they were called goudgekkies, you know, the crazy gold guys. And there was no serious debate about gold possible, and that always struck me. So we are so used to this paper dollar system that hedging yourself and fleeing towards gold seems crazy. But now we know the manipulation story, the gold manipulation story has been proven. We only had to wait 20 years to see these headlines in which JP Morgan, they had to pay a fine of almost 1 billion. This is a statement of the Department of Justice that JP Morgan's metal desk was a criminal enterprise. So that's quite shocking. But still, you know, in the Western world, who of you has ever been tipped by his bank to buy physical gold? It's still a taboo in the Western world. It's different in China. So when I wrote The Big Reset in 2013, I wrote that a system reset is imminent. World's financial system will need to find a new anchor around 2020. I think we reached the point that huge changes are fast approaching. And when I revised The Big Reset in 2016, I added a chapter on Russia and China joining forces to try to reconstruct the current world order together. This was a statement coming from Moscow in, what was it, 2015. Now, 8 years later, we all seem to be shocked that Russia and China are joining forces to fight the West. And especially after the military invasion in Ukraine started, it became quite clear that our Western reaction of implying sanctions on Russia hasn't been followed by many countries worldwide. Actually, we've seen a strong divide between the West, US and its allies, and the BRICS countries and its allies. And on a recent visit of President Xi and Putin, President Xi was called on camera to promise Putin that they would work together, join forces, to bring changes not seen in 100 years. So things are moving fast now. One of the analysts who is on top of this story and very early on understood what the significance of all this was, that's Zoltan Pozsar. He's a credit analyst for Credit Suisse. He used to work at the Federal Reserve, and only a few weeks after the invasion in Ukraine, he published this report. We are witnessing the birth of Bretton Woods III, a new world monetary order centered around commodity-based currencies in the East that will likely weaken, well, the West. A crisis is unfolding, a crisis of commodities. Commodities are collateral, and collateral is money. And he explains how we're reaching the end of a paper dollar system based on paper assets. And he is pointing towards the resurgence of commodities and gold being the real money. And this, I wanted to point this out because why did I start a commodity discovery fund? We were always looking for a hedge because we were in this era, this century of constant debasement of the currencies. Now inflation has arrived, it's becoming quite obvious. It also explains the strong growth of our fund. And now we've reached the point that it's not only Zoltan Pozsar, but even the ING Bank published a report that the BRICS might introduce their own reserve currency, their own world reserve currency. And there are some rumors that it might be gold-linked or gold-backed. And the reason we started this fund to invest as much fiat money as possible into commodities, especially the precious metals, should be a great choice when the changes are arriving as described by Zoltan Pozsar and ING. And if you follow our media in the West, you're probably not aware that over 140 countries worldwide are not joining us in sanctions against Russia. Doesn't mean they're all friends of Putin. It means these 140 countries, all the countries in Latin America, all countries in Africa and the Middle East, and most in Asia, they have China now as their main trading partner. And that's a big change from good 20 years ago, when they had the US as its main trading partners. And what do you do when your main trading partner is not the US anymore, but China? You look at China for money. You don't look at the IMF or the World Bank. So China is supplying a lot of financial support for all these countries, trying to bring them into the BRICS alliance. So when you follow our Western media, you get this, you have this idea that we all support the sanction, but the world is changing rapidly. And here you can see the investments by China in all these parts of all these continents. And I think these changes are going full speed ahead now. The BRICS will have their new conference in Johannesburg in August this year. I plan to go there. I expect some, important news coming from this BRICS conference. And as Zoltan Poza pointed out, this is the start of Bretton Woods 3.0. Bretton Woods 1.0 was in 1944 when the US sold us their dollar system. They had to promise the dollar was as good as gold. And as explained, the US took the dollar off the gold standard because they lost half of their gold in the late 1960s, when many European countries didn't trust the US monetary policy and exchanged surplus dollars for physical gold. Ever since, the US hasn't sold an ounce of gold, but the US convinced many of their friends in the West to sell most of their gold holdings. Now we see a fast expanding BRICS alliance. Even Saudi Arabia, which has been the key supporter of the dollar since the petrodollar deal in 1974, has, openly said that they're willing to do deals now in other currencies than the dollar. They might even join the BRICS alliance later this year. We heard the same from the president of Mexico. We even heard President Macron from France and the German Bundeskanzler make statements in China that France and Germany support a multipolar world. And this is code language for saying we don't want to have this dollar system anymore as the sole world reserve currency. The Turkish interior minister last week even stated the whole world hates America. So suddenly all these countries, they feel empowered enough to stand up against the US, stand up against the West. And I think the repercussions will be great. And actually, in my opinion, it's all unfolding now. The scenario of the big reset, the war on gold and the financial endgame. The war on gold, keeping gold low, like the central bankers have done in the 1960s with the London gold pool. That failed at the end of the 1960s. Then we saw a rapid rise of gold from $35 to over $800 over a period of 10 years. We could expect something like that to happen. If you study the physical market for gold, the physical demand for gold by sovereign countries last year was the largest since 1968. And that shows that sovereign countries, central bankers, are hedging themselves by buying as much gold as possible. So the revaluation of gold, which is a recurring theme as well in my books, could well be expected in the next few years. this is a statement that was from the press conference when the German leader visited Beijing. So we all know that the current explosion of debt, especially in the US, this is unsustainable. It took the US 215 years to reach a debt level of 7 trillion. Since March 2020, 7 trillion was added. So we're fast approaching an important point in which the system will see changes coming from the East. And even the media in the US can't ignore it anymore, and they keep publishing reports like that. And if you look at this graph, it's about, I copied this from Bloomberg, it's about the changes of the financial reserves of central banks. So the dollar reserves are going down quite a bit, and this is a very early sign that there's a move away from the dollar. I don't think this will mean the dollar will crash and become worthless. We used to have the British Empire. The British Empire turned into an American empire. The British pound is still around, became less valuable. The same might happen to the dollar. And this quote by Larry Summers it proves what's happening outside the Western world today. China is giving so much financial support to all these countries, and the US is just giving them a lecture. There's one big risk. At the end of the big reset, I wrote, I hope we can work together with the East, the West and the East, to move this system into another phase for the world's financial system. But there's a risk we can have a confrontation, we could even have a war. And now the US clearly sees China as a major enemy. And we see many statements coming from the US that they're prepared to go to war because the decline of the current status for the dollar is there's a lot at stake for the US. So let's hope this warmongering from the Western countries is not followed up by China. But China has become more militant as well. China was always very diplomatic in their statements regarding the West. But we see that changing, and a more militant tone comes from Beijing. And Larry Summers has warned that it's very risky for the US to try to tear China down as well. So the next few years, the next few months, next few years will be, will become very special. We should expect some huge moves, especially in the currencies, and China being one of them. This tweet recently came from the official spokesman from China, and it's the first time I've been following China for quite some time in their communication, especially and their reaction on the US. They openly point to the fact that the US attempted assassination of 50+ foreign leaders, and the Chinese have done their homework. People who read my latest book, Patronen van Bedrog, which was only published in Dutch, Patterns of Deception, will recognize that a lot of this information was also published in Patronen van Bedrog. China is able to confront the US now, because we used to have the situation that the US was the largest customer for China, so they couldn't afford to lose it. But if you look at the Chinese economy, US imports from China, it's now a good 2% of the Chinese economy. So we have this showdown in the world of geopolitics. And I would like to end by this quote also from Zoltan Pozsar. Investors are not particularly well trained to deal with geopolitical risk, because for generations, geopolitics didn't matter. Anyone who traded securities or ran a portfolio since the end of the Second World War did so in the cocoon of a unipolar world order. And this is changing now, and I think that's the reason why you need to have good hedges in your portfolio. And you know our golden rule, 25% in real estate, 25% in physical gold and silver, 25% in stocks, equities, could be our fund, 25% in cash/Bitcoin, and that's the way we'll survive this crisis. Thank you.
Well, phenomenal.
Not a positive note, but well, for precious metals,
well, the world's always changing anyway, right? Might as well play along. Might as well play along. We have time for a few questions, Willem. Do we have any questions for Willem from the audience? I'm sure we do. Oh, there's somebody right there. Just wait till the microphone gets to you, please.
Are we time-wise?
7 minutes ahead of schedule.
Yeah, we should stop.
Thank you. Willem, you just talked about your golden rules, or the wets van Willem. You talked about 25% in real estate. What do you think about investing in real estate in Holland or the Netherlands right now, or for the future?
Yeah, well, personally, when people think about investing in real estate, most investors make a little mistake to think they always should invest in their home market. And the real estate market in the Netherlands is totally different from, let's say, the real estate market in Dubai. Personally, I bought some apartments in Dubai. Why? Prices of real estate in Dubai went down for 15 years. It's like gold in around 2000. If you look at real estate in the Netherlands, has been going up for, what is it, 50 years? So when I decide from my own portfolio where to invest my money, I prefer to buy real estate which is real cheap now compared to, well, real estate in Amsterdam. In Dubai, I pay 4,000 euro the square meter for the best location. In Amsterdam, I pay 12,000 a meter for an old building in the Pijp, which is... and so I still believe in real estate because, like Zoltan Poza mentioned, you know, we move away from paper assets to hard assets, and real estate, these are great real hard assets.
You have a follow-up question, or?
Thank you.
Okay, perfect. Do we have any other questions for Willem? There's one.
Yeah.
Yes. Hi, Willem. Now that the US and Europe central bankers are actually on your side and are net buyers, how does that change your perspective on this situation?
Well, there's a distinction. You see all central banks east of Germany adding to their gold reserves, and quite a bit, even Poland and Hungary. And these countries are buying tons of gold. But the countries in Europe here are still allies of the US. And I'm quite sure that a lot of pressure has been used from the US to convince them not to start buying physical gold. Ireland is an exception. Ireland started to buy gold. But what we've seen in the European countries, they stopped selling the last 10 to 15 years. They started to repatriate gold from New York, from the Federal Reserve vaults in New York. But we always think that it's about the West. It's not about the West anymore. The countries who apply sanctions on Russia now, only 1.5 billion people live in those countries. There are over 6 billion people living in these 140 countries who don't support the sanctions. It's a numbers game. We're being outnumbered. The BRICS, the total size of the BRICS economy is already larger than the G7 economy. So it's not about us. The changes will be coming from the East, like Zoltan Poza predicted.
Absolutely. Do we have any more questions for Willem? There's one all the way in the back. Raise your hand again.
Kids as well. Kids as well.
No? Okay, didn't see that one. Yep. We'll...
Thanks, Willem. Do you think there will be any change in the relative premium that we pay for exploration and mining assets in, for example, North America versus countries that are more likely to trade with the future BRICS countries? We know there's a premium difference now between, for example, Canadian assets and South American assets, which is an investment opportunity. Will there be something like that?
Well, we could see a situation where countries who are part of the BRICS alliance are regarded as less risky than countries like Canada, because Canada sold out of their gold holdings on advice of their US friends. And Canada might be tempted to nationalize gold mines one day. While the BRICS countries really want to develop this gold industry and want to push the price higher. But there have been some rumors that it's also worked out in the big reset. The US might try to take the initiative again and revalue gold, because the US has 8,000 tons of gold. It's on the balance sheet for the historical cost price of $42. So if the US takes the initiative and revalues gold to $4,000, they could even link the dollar to gold again. That would take a lot of power away from the BRICS alliance to be able to do this, the same. And I heard some credible rumors from some good sources that this was openly discussed in the US in March 2020, when the whole system was coming down during the Corona crash. So there's lots happening behind the scenes. Don't expect the media, it is not to blame the media, but don't expect this can be or will be discussed, because the media doesn't know. The media can only report facts, and these are all scenarios and rumors. So, well, keep following us. Yeah.
Maybe time for two more questions,
Yeah.
I think. Kit?
Willem, there's a lot of discussion, rumors of the shortage of physical gold. As we know that most, vast majority of pricing and trading as gold is paper gold on the futures exchange. There are some examples. One I can think of, the Kensington mine in Alaska. They don't ship gold bullion, they ship a gold concentrate. That goes to a smelter in Asia and is never really seen again or reported as gold, because when it leaves, it's a concentrate. So what do you think will be the result of, is there a shortage of physical gold, and what will happen when that maybe gets recognized?
Gold demand, physical gold demand is that high that needs to be stressed within the gold system, and the strong rise of the gold price tells you a story. But you also know that central banks, they own a lot of gold. They can always use that gold to, to disturb the markets. It has been done in the 1960s with the London gold pool. But there's a rumor now as well that the Central Bank of France, the Banque of France, that they're buying 3 to 4 tons of gold per day now. So when news like that would break, it's like Saudi pivoting from the west to the east and declaring an end to the petrodollar system. So when you want to know what can happen to the price of gold, and I expect a problem in silver first, because that's a much smaller market, and central banks don't own any silver, so they can't use these tricks. Maybe they can use the ETF reserves, but when you look at the silver market, that's a very small market. Silver is outperforming gold now, and if you want to know how fast this how fast these prices can rise when there's a change in the fundamental market, look at palladium. What happened to palladium? There was a surge in demand for palladium in 2017. The paper shorts got scared. They were pushed out of the market, and palladium went up 4x within 2 years. And if you study the outstanding future contracts, palladium is still low. Silver is very high, platinum is very high, gold is very high. So I think the usual suspects are still able to control the precious metal prices, besides palladium. But they could well lose control. And when we have these big changes coming and the BRICS becoming more powerful, and we know the BRICS like the precious metals, you have to expect that the managing of the precious metals prices, it will break. And then we could have some very serious moonshots.
Moonshots, I'll take it. $4,000 gold sounds interesting.
3,000 is enough.
I'll take it. I'll take it. We had one last question I saw. Was that gentleman over there? That's the last one, and then we'll break.
Short break.
Het huidige paradigma in de economie lijkt te zijn het modern monetary theory. En dat lijkt een beetje op, als je geld nodig hebt voor goede dingen, dan moet je het gewoon bijdrukken. En als je dat gaat lenen, kun je het altijd terugbetalen. Want dan druk je gewoon weer nieuw geld bij om ook de rente te betalen. Hoe houdbaar is dit? En is dit nog altijd het paradigma zoals dat in Amerika en in de westerse wereld opgang doet?
Yeah, the question is how sustainable is this idea about modern monetary theory, where you can always print money and always, buy time and solve problems. I think we've done that for the last 50 years, after taking the dollar off the gold standards. We always could use the central bank balance sheets and just print more money. But now inflation is back, and we have the superinflation. You know, food inflation in many countries is 20–25%. I think it shows that there's a price to be paid if you continue with the debasement of currencies. And I think we reached the point that it doesn't work any longer. So I once said in an interview, you know, we reached the end of cheap food, cheap energy, cheap labor, but we also reached the end of cheap solutions, which is just printing money. Because there's one problem you can't solve by printing money, and that's inflation. You can't solve inflation by printing money, you know. So central bankers are really cornered. The central bankers tell this themselves. Lex Hoogduin, Dutch former central banker, he said. So the central banks now have to choose killing inflation or killing the economy. And that's the reason also why we get a bit more defensive in our fund. I get a bit more defensive personally, because, it could get messy. On that positive note.
And on that bombshell. Fantastic. Willem, what a wonderful day. This is sort of the end of the official part of the Commodity Discovery Fund Day. Please stick around if you're a participant in the fund to participate in the annual meeting afterwards. It starts at 4:15. So we're going to have a quick 25-minute break and then reconvene, or you will reconvene in here, because I'm done. I'm out.
Yeah, let's say 20 minutes.
Right.
4:10, we start the annual meeting. That will be in Dutch, actually.
That's rude.
We have another 40 slides.
Fantastic. Everybody else, thank you so much for coming. Thank you so much.
I should say thanks to Kai. He's been a wonderful host. And thanks to Casper and Caroline for organizing this event.
Thanks. Thank you so much.